We think there's more downside risk here as we go through the next few months.
When the yields move, they're going to move down and a lot.
The question is not whether things are declining, it's whether they're declining fast enough.
I think positioning has really changed, and you've seen that inflection in sentiment in the options market.
The bottom line is the Fed wants to slow things down. Don't fight the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, Vietnam. Live from New York City this morning. I've been dying to do that since yesterday. This is Bloomberg Surveillance on TV and radio.
You sleep last night practicing that.
Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market positive this morning by 0.4% on the S&P 500. That was quite a news conference, TK, over at the G20 from the President of the United States.
Those of us vested in the debate, and I did not serve in the military, I want to make that clear, but those of us vested in it, there was a conflation of events there that I would suggest spiraled out of control, perhaps. I don't want to overplay it, but I believe there were reports they shut down the press conference early. This is the president in Hanoi. That always fraught with emotion. And clumsy is the operative Monday word.
Yeah, maybe clumsy is the right word. Yeah. AMH is going to join us here in New York City, actually, a little bit later this morning. So looking forward to that conversation, Tom. Pushing ahead, we've got CPI on Wednesday, retail sales on Thursday. The Federal Reserve entered a quiet period over the weekend into their decision next Wednesday. Tom, we've said this a few times over the last week or so. Rate hikes on ice. Can that data Wednesday, Thursday change that story?
You know, this can be able to change the story, but I think you got to stagger to ECB. I'm sure we'll cover that under surveillance and through the program today. And the answer with the ECB is, and I'm going to state this boldly, never for Americans has a Lagarde press conference been more important. I think I can go out on a limb on that.
ECB. Thursday, Tom.
Yeah.
On Thursday, a little bit later this morning, actually, about 10 minutes from now, we'll catch up with the European Commissioner on their new forecast. And their forecast, Bramo, seemingly heading in the wrong direction.
Stagflation, basically confirming that this is led by Germany going into recession this year, and that's going to slow growth at the same time that inflation is sticky. So that leaves a question for the ECB. How do you pair your singular mandate of inflation with a subtle dual mandate of trying to support a region that's not quite flat on its back generally, but not in a great position?
We're going to have Gianelloni of Italy with us here in a moment to talk about Northern Macedonia 1.
Okay.
Okay. The former prime minister scheduled to be with us, and he was one of my most important conversations of the year. Lisa, I didn't know this. Let's bring it up here. COVID nominal GDP. This is from the beginning of the pandemic. United States, with all that stimulus, up 24% in total. U.S. up 24%. In euro, as you mentioned, Lisa, really stagflation, up only 8%, one-third as much.
There's a long-term question around whether the U.S. will actually retroactively be seen as doing the right thing with pumping a lot of money. Perhaps the scale and at the end a little too much, but still a better basis to come back from than Europe. But then does it leave the ECB in the same place that the Fed is in right now, which is changing their tone? I mean, this is a shift toward flexibility because right now it's unclear what the bigger risk is. The downside risk to the economy or the upside risk of inflation not going down.
And that is the EM dilemma, and it's always a tough one for any central banker to have to face. The BOJ, Tom, bit of pushback there. Perhaps we're having a real conversation about a credible policy threat, which is to shift away from negative interest rates by the end of this year.
Yen in stronger yen, 147 to a 146 handle. These are not big moves, but yet there was that whisper, and it wraps around. I believe this weekend there were 47 articles in the Zeitgeist on China. I lost count at about 40. I think The Economist alone had 6 articles, and Bloomberg, of course, was some wonderful work out of Hong Kong. But, you know, the bottom line is it's just there. It's over there. It's distant, but the pros tell me pay attention.
You could have taken your pick over the weekend. You could have done a Giants, Cowboys. You could have talked about the US Open. You wanted to talk about Italy, North Macedonia.
No, I was riveted.
3 minutes into the show.
You know, well, not 3 minutes into the show, but what are they playing for? What is EF? Is it EFL?
To qualify for the Euros next summer. That's what they're playing for.
And the Tots.
No,
this is a national team.
The Tots aren't in this. Okay,
this is a national team.
Let's save this for the commercial break.
Is this for the World Cup?
Equity futures on the S&P. No. Okay. Positive by a third of 1%. We're elevated here after a week of losses.
How about those Giants?
Into the bond market. Yields up by a couple of basis points. 428.80. 40-0. New York sports right now. Giants, Yankees. Lisa, I know you're a Jets-Mets fan.
No, actually.
Oh,
it's Mets Giants.
Oh, that's an odd mix.
Yeah, it's
that's
very
an odd
odd.
mix. Aren't the Glory supporters usually just sort of Yankees, Giants?
Yeah.
The long-suffering fans are Jets, Mets. That's how it works.
That's typically how it works.
So you barbelled?
Yeah, I barbell.
Oh, good.
It's basically,
Smart.
Treasuries and tech stocks. Anyway,
nice.
Just to give you a sense of what we're looking at this week, we talked about how it's a big week of data. We also are looking at Apple setting to unveil the iPhone 15 and the next generation smartwatches at Wonderlust, which I'm sure you're going to be citing frequently in terms of the name. Wednesday is U.S. CPI, a real focus here on core CPI. Headline CPI is expected to actually remain sticky or tick up on the heels of that 9% increase in crude prices during August. But do we see that core continuing to come down, which will give the Fed reprieve to pause and maybe just stop hiking? And Thursday, ECB meeting, as well as PPI and retail sales in the U.S. and the deadline for the UAW to potentially strike against the big three in Detroit. More on that later. The ECB very much front and center, though, I would say. And Tom and John, it was what you were talking about earlier. These new projections from the European Commission setting up the dilemma that the ECB is going to have to face off with in just a couple of days.
And they've got to address that in the news conference a little bit later this week, led by ECB President Christine Lagarde. Joining us now is Marvin Lowe, Senior Global Macro Strategist over at State Street. Marvin, good morning to you, sir. It's wonderful to have you with us on the programme to kick off the trading week. CPI a little bit later this week. We get retail sales as well. Marvin, once we get to Friday, what do you expect that data to look like?
Yeah, I mean, I think we're going to get a continuation of the positive trends with the core data. Certainly PCE raises the risk that it might be a little bit of an upside surprise. But, kind of having said that, given where we were in the summer, I think we're moving in the right direction. The consumer remains strong, so there kind of continues the challenge that the Fed has in terms of a strong consumer. And it making it harder to get towards those inflation goals.
I look, Marvin, at the idea of taking strategy or economics and having a conviction and belief. I love your phrase, painfully neutral. I mean, there we are, treading water here. Do you have conviction where you can be in the market? Are you convicted to a correction, or do you got a gloom bear market out front?
Yeah, I mean, we need a conviction when we approach our portfolio selection process ultimately. In terms of playing the market with regard to the choppiness around that conviction, I think it makes it to a certain degree harder because certainly we're going to have volatility in the markets, but it's going to create opportunities if we believe in ultimately that conviction. I do think that the recession risks remain out there, and the higher for longer conversation becomes a harder landing, particularly when we look at kind of some of the spending headwinds that begin to come into the market next year. And then, again, opportunities around that.
First study I did this morning, Marvin, was a Bloomberg Financial Conditions Index. I went way back, 06, 05. 11 ratios folded in there, I believe. It's a toxic brew.
Yep.
And the answer is we are accommodative. Are we painfully accommodative for central banks like you're painfully neutral?
Well, I think we've got the policy divergence that's starting to emerge globally, and it's making these conversations interesting for us in the macro space, but it's really showing the challenges that all the different central banks have. It's hard to say that the U.S. is incredibly restrictive, just given where the economy is performing, whereas you see that transmission mechanism making its way much more readily into the European economies and certainly the economies around the Antipodeans. So, you do have kind of these divergences, which is really the challenge that we have going into the end of the year and thinking about policy going into next year.
And then understanding also the interrelationship between some of these divergences. I think of the Bank of Japan over the weekend, raising the possibility of understanding the need to abandon negative yields and even move away from yield curve control as soon as later this year. This is a new kind of time frame. Does that shift your understanding of where U.S. yields should be, given that, there is this divergence, but there's an interrelationship between these global markets?
Yeah, I mean, that's significant. The view that Japan is finally in a position to make a longer-term decision, reversing something that has been, a decades-long policy, is significant within the global landscape, particularly when you look at it from the U.S. perspective and their participation in the Treasury market. That's a conversation that we started to have in early August, which now comes to the forefront again if they're not as accommodative, for sure.
Morgan Stanley came out and said that they actually have conviction that yields are going to come down and to remain bullish on U.S. bonds. How much do you push back against that? How much do you feel like the stickiness that we're seeing in yields is going to be really the new normal?
Yeah, I mean, I wouldn't be playing a significant decrease in yields at this point in time. I do think, again, a recession is going to drive that type of conversation. But, again, that painfully neutral type of view. Kind of having said that, where valuations are, I don't mind the income, quite frankly. And I still think that you could think about curve steepeners, but, you need to do it more tactically than just looking at a 2s, 10s perspective. You got to look at how long this thing might take and whether or not a 5s, 30s view makes more sense. But just simply owning treasuries in an environment where inflation is below that yield is a decent return.
Are you saying pick up the front end, Marvin, or are you saying go out the long end?
I like the belly more. I like the belly more.
Okay, so the 5 to 7 year portion of the curve.
Yeah.
Does the same apply to credit? Because we had a lot of credit issuance last week, and the bulk of that was quite short-term stuff, Marvin. I just wonder what kind of signal you take away from that issuance.
Yeah, I mean, it's opportunistic for sure. The fact that the liquidity is in the market is ultimately a concern. Corporations are taking advantage of that. I still think that credit is a challenge. If the short end becomes a risk, certainly high yield has a greater risk associated with that. Really kind of getting past the choppiness that might evolve over the next 2 to 3 years is something to be cognizant of.
Marvin, thank you, sir, for the update from State Street. Marvin Lowe, thank you very much. The latest data from Bank of America, and thank you to the team here at Bloomberg for sharing this. The share of the high-grade corporate bond issuance with maturity of 10-plus years was just 10% in the last month to September 6th. Tom, the lowest since at least 2010. So the companies coming to market are issuing really short-term stuff. Yeah. The belief is that perhaps this is a signal that even the corporations themselves see rates coming in a little bit lower, perhaps in the future.
I got a huge opinion on this, which is I'm not qualified. Bramo, weigh in here on the wheelhouse, the Bramo wheelhouse.
Well, there are two ways to look at this. Number one, that this is where the demand is because people have more visibility in 5 years than they do in 10 years. But the second thing is these are companies that are not planning on paying the rates that we're seeing right now for a longer term. They are looking at short-term financing that they can then refinance into much lower rates down the line. And that's sort of how I interpreted it.
With the yield move, are the big companies like Apple precluded from gazillion-dollar offerings?
Apple's not prohibited from anything, but why would they want to do a gazillion-dollar offering? If you think about it, they've got gazillion dollars of cash just sitting there. So if they've got to issue it up at that kind of yield, I don't know if they can. Why would they want to?
Busiest start to September issuance on record. And pushing back potentially, as Lisa mentioned, and I did as well, Tom, against this high for longer story at the Federal Reserve.
I read the strategist John Steinbeck this weekend, and it's about an August of our discontent. I'm sorry. It is a gloom out there. Can we get over the gloom right now? You've mentioned this,
We're doing
John.
August again.
Yeah, we're in August, and we're into September. On this historic September 11th. We'll talk about that through the show.
Right, okay.
And John, the bottom line is we've got a market drawdown of 3%. It's terrible.
I've said no drama a few times yet.
Yeah.
It was ugly at one point in the middle of August. It felt worse than that, Tom. But, yeah, it's got better since then.
Drawdown, 3%.
Drawdown. Just engage the mic a little bit more. It always helps. There you go. It's on.
Got it.
Good stuff. Coming up next, Paolo Gentiloni, EU Economy Commissioner, is going to join us on the latest forecasts out of the Eurozone. And the latest forecasts out of the Eurozone, not fantastic. They've had to cut those all over again. Is stagflation the risk or the reality for Eurozone policymakers? We'll have that conversation in just a moment. If you are just tuning in, equities are positive here by 0.3% on the S&P 500. Yield shaping up as follows by 2 basis points higher on a 10-year, just short of 430 at 429. Live from New York City this morning. Good morning.
If you're worried about stagflation, it's Europe and it's the UK where the threat is highest. And it's a really tough situation for the ECB. If the ECB wasn't a single mandate central bank, they probably wouldn't hike. I've put a 55% probability that they end up by hiking, but it's that close, John, as to whether they should hike again.
It's a tough one, a tight call. We're right down the middle. That's the split in our survey here at Bloomberg. Ahead of the ECB on Thursday, that was Mohammed Al-Erin of Bloomberg Opinion, and of course Queen's College, Cambridge as well. Looking over to Europe, not just for the ECB on Thursday, but also the latest forecast from the Commission. This is the outlook for growth in the 20-nation economy, the currency bloc. The outlook looks like this: 0.8% growth for 2023, compared with an earlier forecast for 1.1% growth. If you're looking out to next year, similar cut, 1.3% is the forecast for next year. The question, Tom, for me at least, given what's happening with China at the moment and the slowdown they're experiencing, are they vulnerable to downside surprises, even with that resetting of the bar, Tom, lower in the Eurozone?
This is the global feel that we got from the IMF. And at that meeting in April, John, the three of us sat there stunned when Georgieva and her economists looked out at a 5-year combined global slowdown, not just about China. And we've seen some of that follow on in Germany and now in these EU markdowns today.
Even back then, though, Tom, I don't think we fully understood, realised, appreciated the gravity of the slowdown in China off the back of the reopening.
I agree. Oh, yeah.
What was that, spring of this year? That wasn't really a feature, Lisa, of the overall conversation.
Especially given the fact that Germany is going into contraction and they're arguably the most exposed to China and the reopening that was supposed to be incredible that we didn't really get. There are a couple of questions here. Number one, what does the ECB do with this? But number two, what does the European Commission do at a time where it's more expensive to borrow, more expensive to spend? And there has to be some sort of policy shift in terms of where the mix of business is, where the generation of income for this bloc really is going to come from.
Rock and a hard place, which is why we saw 106 on the euro against the dollar just last week. Right now, 107.28. Let's go through the price action and have a sneak peek of the rest of this week. We've got CPI on Wednesday. On Thursday, we've got retail sales. No Fed speak going into the decision next week. We're in the quiet period off the back of all the Fed speak you've got last week. So if you're not sure where the Fed stands after last week,
go read those.
I can't help you. I really can't help you. In the bond market, yields are higher by a couple of basis points, 428.80 on a 10-year. Equities are higher by 1/3 of 1%. I want to finish on foreign exchange. I've already mentioned the euro. I want to talk about the yen. Dollar yen, it's a move of about 3/4 of 1%. We've come down on that currency pair, so yen strength to 146.74. Governor Ueda having a conversation, Tom, about backing away from negative interest rates. Now, I'm not a big fan of verbal intervention, but when you have a credible policy threat, the market will pay attention. How credible is it that this BOJ can back away from negative interest rates by the end of this year if wage growth remains buoyant through the rest of 2023?
Most people in the lawn at Jackson Hole would say it's a busted experiment. Where do you want to go on this? Let's go to the bonds. We've been talking about the bond market all morning. You basically have, John, a freely floating, distant maturity Japanese market with price down, yield up. And then you've got this contrived structure in closer, which is called YCC. How does that break? When does that break?
One thing we mentioned in Jackson Hole, Tom, just the differences between Japan, they've got their own problems. The US, we have our own problems. And Europe, Tom, the problem's there right now. I think Lisa did a great job of setting this up. The framework for thinking about Europe at the moment: upside risk to inflation, downside risk to growth. That's a problem for any policymaker in any situation, in any location.
Talk about policymakers, and how about someone steeped in domestic political affairs in Europe and is Italy, including being prime minister. And John, this is one of my most important conversations of the last 12 months. Gentiloni at IMF meetings was stunning how acute he was.
Let's start that conversation right now with Paolo Gentiloni, the EU Economy Commissioner for the European Commission. Commissioner, wonderful to catch up with you once again, sir. It's been a number of months. We've got the new forecast from the Commission in front of us right here. Can we start with stagflation? Is that the risk for you, sir, from your personal assessment, or is that the reality?
I think it's too soon to say that we are in a stagflation framework. What is clear, I think, is first that we avoided recession, which was not obvious only 8-9 months ago. Please consider that, of course, the Russian war against Ukraine is for the EU an economic issue, not only a geopolitical threat. So we addressed these issues, we avoided recession, but indeed growth is slowing. This morning we present the forecast, and the forecast is for 23 of growth of 0.8%. Is this something of long duration? Well, our estimate is that we will have probably a rebound already next year. So this is why I would not call it abruptly stagflation. It's a moment of easing growth for sure.
Commissioner Christine Lagarde, in a speech in New York in April, talked about a need for capital reform, market reform in Europe. Obviously, there's a primal scream of fiscal reform in Europe, which you've lived as former Prime Minister of Italy. How urgent is reform given the war and given the present monetary crisis within Europe?
I think it's urgent. We also, of course, should take into account the fact that we are entering in the period where we will have European elections. So this is a challenge, a midterm challenge, not something that we can solve tomorrow. What we have to address now, I mean tomorrow, is the difficulty to find the right balance between supporting investments and addressing inflation. We have the privilege and the opportunity to do so for the first time in the EU story, having behind us a strong tool of common funding, allowing also to weaker fiscally member states to invest and to spend. This is the main challenge ahead of us, but I fully agree with Christine Lagarde that we need capital markets reform to regain our competitivity in the global markets.
Given the fact that you talked about this challenge between inflation and slowing growth, right now, has the balance of those two risks shifted for you and actually become more important to see growth and that investment in all sorts of roots of something stronger rather than being that much more aggressive in fighting inflation?
Well, inflation in the forecast we presented this morning, we have growth easing momentum, but also inflation declining. So you are right that we are in this narrow path between these two things. I don't think it's easy now to say, okay, we won the challenge with inflation, so let us concentrate on spending and investments. I think we are near to the peak of interest rates, that the decisions will be taken, of course, by the ECB and not by the European Commission on interest rates. At the same time, please preserve the good investments. Can we do this also in countries without deep financial pockets? Fortunately, yes, because we have these Euro bonds, this common funding. And this is the opportunity we shouldn't miss in the coming months.
Does that mean you see more easing, potentially the ability to raise more money? Paolo, is that what you see further down the line, that you can come together and issue more debt?
Oh, I see the existing programs that at least until 2026 will disburse to member states still more than 600 billion euros of common money.
Commissioner, we have to leave it there. It was great to see you earlier this year in DC, and we hope to do it again early next year. Paolo Gentiloni there, the Economic Commissioner for the EU Commission. From New York, this is Bloomberg. Your week begins like this in the equity market. Equity futures with a lift here on the S&P 500 by 0.34%. On the Nasdaq 100, bouncing back from last week by 0.5%. Going into a new iPhone 15 launch a little bit later this week. Critical for Apple in the crosshairs of tension, Tom, between the US and China.
Mark Gurman did an all-nighter this weekend. We published like 3 articles.
What did he say?
It's just definitive. He just lined up the ducks and the what-ifs and all that. And I guess, he's a whisperer. He like his information.
Has he whispered what the new 15 looks like relative to the 14?
Yeah, they got a bunch of features that they're guessing on, and some of it's not guessing. I think the watch is just sort of like a tweak, and there's AirPods, and
there's AirPods.
Everybody's going to wear a black turtleneck.
There will be AirPods.
I'm pleased you're not leading the unveiling of this phone later this week, Tom.
I've never once watched the show. I've never once watched it. Not once.
I've never watched it in full. I've watched pieces of it.
I think
obviously.
It's sort of silly, but there
That's
it
where
is.
we are.
People care. There's a new cable. Europe's demanding. It's a cable the dog chewed on 3 days ago.
God bless Europe on this one, eh?
Yeah.
They've got to stop messing around with the chargers and the cables, and hopefully we're done with that now. Your equity market then positive. It's a bit of a tangent, I know, but welcome to the programme. Your bond market looks like this. 2-year, 10-year, 30-year. 2-year just south of 5%, 4.99. Yields higher by a couple of basis points across the long end. Up 2 basis points on a 10-year, 4.2880. On a 30-year, up 3 basis points to 4.37. Going into inflation data on Wednesday and retail sales on Thursday. And a finish in foreign exchange. The euro looks like this. It's not the time to think about a stagflation framework, according to the EU Commissioner, Paolo Gentiloni, just moments ago on this programme. The euro positive, just slightly stronger against the dollar, 107.30.
You really pushed against it.
Big time.
Yeah.
Yeah.
We're not stagging.
We're not stagging.
Okay.
Sort of what he said.
Under surveillance this morning, the dollar weakening against the yuan and the yen. China's economy showing signs of stability as credit and CPI improve. While in Japan, the BOJ, according to an interview with Governor Ueda to local media, Tom, considering ending its negative rate policy, there is a basic hurdle, which is wage growth. If wage growth remains sticky into year end, then maybe we can do something about negative rates.
They're getting used to inflation over there. It's 3% inflation roughly, and that's a new feeling for the people of Japan. And I would suggest a lot of this is away from waving at mountains at Jackson Hole and much more about the millions of people in Japan going, wait, prices are going up.
Yeah, this is a change.
Whole new feeling to it.
For multiple generations. Treasury Secretary Janet Yellen saying she's, quote, very confident the US can achieve a soft landing. Yellen making those comments on her way back from the G20 summit in New Delhi, India. The question I've got, Bramo, is this Janet Yellen the economist or Janet Yellen the politician going into 2024?
Increasingly difficult to say, especially because she has been really discussing the soft landing, and she is political. She's been acting politically. I would say this fact that she's saying this doesn't necessarily give a lot of people that much comfort. I think there is more unease with the soft landing narrative that was sort of the de facto understanding a couple of weeks ago, and suddenly more people are starting to push back. So her coming out and saying that probably will make all the many more people skeptical.
The prospect of reacceleration and all that bad stuff, apparently. Let's finish on sport. The US Open coming to a close. Coco Gauff earning her first major title. Novak Djokovic winning his 24th. Djokovic, 36, the oldest man to win the US Open. 19-year-old Coco Gauff, Tom, the youngest American to win the title since Serena Williams did it back in 1999. Age 17.
With all the distractions, it was a glorious ending. I could hear the applause all through, the walk up and
from Queens, over to Manhattan.
No, the windows. People watching it, and there was cable TV issues in New York, but people watching it, and for hours and on end yesterday, Medvedev, put up a big fight, and there was.
There was a moment when Novak wavered in the second set, but he quickly re-engaged and managed to find some energy from somewhere. Tom, you mentioned maybe the blackout on cable, on Spectrum with ESPN. Yeah. Has that been sorted for tonight?
I don't.
Bills Jets?
No, Bills Jets. This is in New York. This is Charter, which has Spectrum, and a lot of people like me don't have it.
Did you get the message basically saying, we know that there are some changes, so you get Fubo? Did you get that?
That's from Spectrum, right?
That's from Spectrum, where basically they're trying
to...
So
you've still got cable?
I got the same email.
Have you still got cable?
That's from the pandemic when we had to.
Well, I got the Zenith with the rabbit ears. It's great.
You're still using the aerial. I used to have one of those in my bedroom.
There's a skyscraper next door, and I've got to get the rabbit ears straightened out.
I had the same thing as a kid, yeah.
Yeah, at the same time.
Try and watch the Champions League football on a Wednesday night.
Bills Jets tonight?
Play around. Yeah.
Yeah, Larion's
if
on the 50-yard line. He's on a 50-yard line.
I'm not sure if he's at the Jets game
up.
tonight.
He's got to be.
He's feeling better about this season, though. He was questioning the choice to go to Aaron Rodgers as quarterback, but he's committed to the success of the team. It's good to hear. Congratulations, Mohammed.
We welcome all of you
for engaging
around
with this
the
team.
world, and particularly across this nation. Now a discussion on the American economy and the reset into autumn. We do this with Greg Dacko, who's been very good, to say the least, in forecasting, chief economist at EY. Greg, I look at the summary of your note, and to me, the arch question not being asked right now is, with China challenges, do they put a disinflationary or outright deflationary impulse on global inflation? They're so interconnected with so many economies. Can we see a China that will they or can they impart disinflation on the rest of us?
Well, I think the important element at this stage is that we are facing a U.S. economy that is showing signs of a slowdown, and we're seeing the same in Europe. We just had the EU Commission downgrade their forecast. I think if you look at what's happening in China, the ongoing slowdown in economic activity that's being broad-based across the manufacturing sector, the construction sector, is going to have a negative effect on the region in Asia, but also on the rest of the world. Now, the effect may not be as large as some people make it to be. We know that the exposure, for instance, of the U.S. to China is relatively limited, but that will represent an additional drag in terms of economic activity. Whether it leads to greater disinflationary pressures, I'm not quite sure yet. The U.S. still imports a lot of its imports in U.S. dollars, so the effects are generally limited.
There are three issues here. There's China and its domestic effect. There's China and its influence on Europe, which we were just talking about is flirting with stagflation, but don't call it stagflation. And then its effect on the U.S. I want to question its effect on Europe and whether we've overpriced the risk of some sort of declining Chinese growth, given sort of peak pessimism that we keep hearing about, and how it feeds into the European economy.
No, I think we have to be conscious of the fact that it's not just a cyclical slowdown that matters. It's the structural slowdown in China that matters, because the longer we have an environment where China is no longer growing at 8, 9, 10%, but instead growing at 4, maybe even 3%, that becomes a greater drag on the global landscape. It affects, of course, the Asian economies that are heavily dependent on imports into China, but it also affects the rest of the global spectrum in terms of weaker economic activity. And we have an environment, again, where global growth is slowing. It's not retrenching. We're not seeing any massive pullback in terms of private sector activity, but we are seeing slower growth across the major economies around the world. And China, that is not growing as fast, where authorities are being much more careful in terms of the amount of credit impulse they put into the economy, becomes a greater drag over the rest of the world.
How does that assessment stack up with what's developing in the commodity market, with crude, with iron ore?
Well, we are seeing this paradox where we have an environment where we're seeing oil prices on the rise, but we are seeing, again, this global growth environment that is slowing. And I think that brings us back to this issue of supply. We're in a world where we continue to see that supply is a key driver of economic activity. In this case, we're seeing both Saudi and Russia talking about further cuts in terms of production, prolonging those cuts, which drags the potential supply and therefore puts upward pressure on oil prices, on commodities. We're seeing that in other sectors as well. Housing in the U.S. is a key example.
I'm struggling with this one because U.S. output is close to all-time highs, and it's not just crude. If it was just crude, I think I'd hear your argument and say, yep, let's move on. But it's iron ore as well. Vale talked about iron ore demand, saying that the outlook for the year is pretty decent. My words, I'm paraphrasing. When you look at iron ore, can you get the same assessment that you've just mentioned to us on, say, crude?
Well, it depends a lot on the demand for steel, the final demand for steel. So if you see the effects of stronger construction around the world that are still going strong, where you also have a supply shortfall, and you're seeing that pull because there is insufficient supply, that feeds into the demand and perhaps puts the upward pressure on the final demand, which feeds into the commodities prices. So this type of economy is a very difficult type of global economy to analyze. I think you have to be very careful with using the old playbook of it's just a demand story. You have to look at all the components from demand to supply.
I want to go to October 6th. And the jobs report in America. Nick Timmeros features a wonderful chart showing the decline in 3-month annualized to take 90 days, 3 data points of jobs report, and then annualize that out. Jason Furman at Harvard talks us up, as well as Dr. Ilarian in an essay this morning. Do you Is there a validity right now to 90-day annualized math showing this abrupt decline in job growth in America?
Well, I think that's really the key feature. I think that's the key element that we have to be focused on in this business cycle. The key reason why we haven't seen a retrenchment in U.S. economic activity is because the labor market has remained robust so far. But it is cooling. We are seeing that job growth has moderated, 150,000 jobs per month over the last 3 months. We're seeing lower hours worked. We're seeing lower diffusion of job growth. The labor market is cooling.
Okay, but the vector of 3-month annualized clearly shows we're going to get to what David Kelly at J.P. Morgan calls a negative jobs growth.
I think
is that sooner rather than later?
At one point, we will see that. We have seen a pullback in hiring. We've seen a pullback in job openings. I think eventually we will see some job losses in the coming months. It probably won't be as strong as in prior recession environments because employers are keen to retain the talent they spent so much time hiring, training, and retaining. But it's not going to be just steady as she goes, only positive job growth numbers.
Basically soft landing, which is what you're describing. And how much is that predicated on the idea that the Fed will start to cut rates by mid-year next year?
Yeah, I think a lot of the conversation will have to pivot towards recalibration of monetary policy in the coming months. It's not going to be a discussion that the Fed's going to be having right now. Right now, the Fed is focused on whether this is the terminal rate in terms of the federal funds rate. We do see the Fed being on pause over the rest of the year, and rate cuts not coming before the end of the first quarter.
There's a lot of noise between now and then, including some strikes, including the UAW strike. How much does that count into your projections? If there are strikes, if there is the labor market fighting back for a bigger proportion of the wages?
I think that's key. I mean, we are in this environment where I was talking about supply issues. It's not just on the goods side, on the capital side, but it's also on the labor market side. We have seen some positive developments in terms of supply. We've seen the labor force participation rate rise to all-time high when you look at the prime age participation rate. We are seeing that the labor market is gradually easing. We're seeing that tightness ease, which is a very encouraging sign. But if we have greater strikes, we know those can have a negative effect on employment. We saw it in the August jobs report, where the strikes of the Screen Actor Guilds, as well as some hotel strikes down in South California, had a negative effect on jobs. This could, again, be a weight on the economy and on the labor market.
It could be a shocking one. Greg Ducker, thank you, sir, of EY.
Thank you.
TK, more disputes between unions. It's ongoing. UPS, we escaped that. American Airlines, we escaped that. Will we escape the potential strikes at Detroit's Big Three?
Yeah, Vallier this morning, Greg Vallier makes a nice partition of it. The tradition is to strike against one company to husband the strike fund so you can go longer. He has a math that if they have 150,000 people go out, I believe they go 3 months.
Well, yeah, the concern here is twofold, right? On one hand, there's the economic impact. It's, I believe, a $5 billion hit to the economy and to these three automakers for a 10-day strike. That's the estimation. There's the hit to President Biden and what it does politically to him if they actually do strike and there is some sort of hit to the economic trajectory. And then there's this question of, are their wages fair? I mean, if you start it at some, $30,000, $39,000 annually, that's sort of where it annualizes out to $67,000 in the upper end. Is that a fair wage, given the inflation, given some of the fixed costs?
Can the union get rid of the name Stellantis? Can they work on that?
I still can't get my head around it.
I'm like, it was formed by committee. It's like Primerica.
Sounds like a beer.
10 days that Bramo mentioned, pushing
Stellantis.
Michigan into recession. That's from the Anderson Economic Group, an economic consultancy based in Lansing, Michigan. Some stunning numbers from them over the weekend. Thank you to David Welch for putting that story out. Coming out, Tina Fordham of Fordham Global Foresight on the G20. And Tina's going to explain, Tom, what on earth a lying dog-faced pony soldier is. The president took some time.
She's not going to show up. She's listening to us right now.
The president took some time to explain that. From New York, this is Bloomberg.
He has his hands full right now. He has overwhelming unemployment with his youth. One of the major economic tenets of his plan isn't working at all right now. I'm not happy for that, but it's not working. So he's trying to figure out, I suspect, I don't know, just like I would, trying to figure out what to do about the particular crisis we're having now.
A rambling news conference from the President of the United States in Vietnam addressing the challenges facing President Xi Jinping and China. Tom, I think we covered just about everything. Ended in the most bizarre way, mid-sentence. Some kind of aide off to the side, Tom, just seemed to cut in and end the news conference. And then the President was asked another question, tried to re-engage with the microphones, and the microphone had been killed.
For those that have not gone through this, the Good Morning Vietnam part was painful. This is Barry Levinson.
That's how it started.
This is Barry Levinson, who made that movie for Robin Williams. And Levinson, who wrote for Carol Burnett, among other things, and did a whole bunch of very highly regarded movies, captured the 60s. And part of that was the profound tension in the movie of a war. And I was sort of shocked to see the president in Hanoi
making jokes about it?
Making a joke or just stumbling over it. I thought, maybe I'm a little too close to it, but,
No, it was odd. It was odd, Tom. Yeah. I think for most people they agreed it was an odd moment over the weekend, Sunday morning. In the evening, of course, in Vietnam.
Yeah, I mean, there's no question about it. And there we are with the president on his way home, I believe, through Alaska, and will arrive here at some point here on September 11th. Joining us right now is Tina Fordham for a brief, geopolitical strategist, Fordham Global Foresight. Tina, we could do a 3-hour conversation with you right now. The world is so topsy-turvy, it is of shock. Are we at a point of instability, or can diplomacy and dialogue lead us to a stable outcome?
Thanks, Tom. Well, it might surprise you to hear me say it, but I actually think that the G20 meeting, for all of its kind of interesting quirks and shifts, highlights how in a topsy-turvy world, most leaders, with the notable exception of Chinese President Xi, who declined to attend, need these gatherings, and they are important. On the one hand, they're an opportunity for what I'm calling geopolitical hedging, a chance to, kind of opportunistically take sides or take part in certain aspects of agreements, like the India-Middle East transport corridor, very interesting development, and extending a seat to the African Union, which was a big India initiative. So, we used to not look at these kinds of international talking shop type of gatherings at all for their impact on global markets. And now they're a little bit of a crystal ball, I think, or maybe something more substantive.
I look, Tina, at the more substantive and where we are right now. What should be the approach of America with 1, 2, 3, 4, 5 balls in the air? How do we prosecute a foreign policy, particularly with China?
Well, there's the old saying about, watching your enemy and waiting till he makes a mistake. Now, China and the United States are not enemies. We used to be frenemies, and now we're something in between. But I do believe that President Xi's kind of snub to India, as it really seems, in not attending the G20 was a strategic own goal for China, coinciding, as it happens, and I was in Asia last week talking to investors in Hong Kong, with this flurry of sort of peak China stories and a real decline in investor sentiment around China. Now, the markets always run faster than global policy, and I think the non-appearance at the G20 by President Xi is a perfect illustration of that. He really should have been there, kind of bolstering China's commitment to international negotiations.
Well, in his absence, President Biden said that the China economic crisis, and that was the word that he used, made an invasion of Taiwan less likely. Do you think that that was helpful, that that was something in the playbook of his strategists, or whether that was something more off the cuff?
Well, I think without seeing into the president's mind and knowing something about his form, Biden tends to call it as he sees it. And so if that's off the cuff, then, that is how he sees it. China economic crisis, peak China, as we more likely to hear in investor parlance. Part of that sentiment, though, right? And Biden is taking a pretty conventional wisdom view, I think, in saying if they're having economic difficulties with Country Garden and with the property bubble and other considerations, the kind of failure to launch of the post-COVID boom that was expected, they're less likely to invade. Actually, history, tells us that sometimes a decline can lead to more willingness for opportunism abroad. I think we should take Biden's comments like this, though, with a grain of salt, to be honest. I mean, more important in terms of U.S. signaling are visits from people like Gina Raimondo and Janet Yellen.
Yeah, there was also the other side of this, where China was protesting the U.S. hosting the 2026 G20. What did you make of all of the meetings, the focus on Vietnam, the focus on India? How much of that is geared toward, yes, trying to shore up allies, but also trying to shore up new manufacturing sites in a material way?
That's exactly what it was about. And in this sense, the U.S. is pushing on an open door in terms of the regional appetite in Asia for stronger partnerships, bearing in mind that President Trump withdrew the U.S. from the Trans-Pacific Partnership Agreement. You could interpret these kinds of deals and the elevation of Vietnam to a stronger status as a trading partner as, kind of making up for that. So, public opinion data has always made very clear that China's neighbors fear both China and Japan. Now they fear China a bit more. And so the U.S. is in a strong position to develop these kinds of relationships. And India, I think, gets a lot of points for the way it handled the summit. And things like the communique, which analysts were concerned, or the journalists highlighted, would there be a communique? That was all about making sure that President Modi of India, Prime Minister Modi rather, didn't end up being the first leader of a G20 summit who didn't, end up producing a communique. So very interesting signaling going on as we rebalance the global system.
Tina, the president will go to Alaska today. He will not be here in New York City. He won't be in Virginia. He won't be at the events in Pennsylvania to mark the 22nd anniversary of the attacks on 9/11. Tina, I wonder what your thoughts are on the appropriate way for a president to mark an event like this one.
I think it won't be lost on people. And, like a lot of you in the audience and in the studio, I was in New York on 9/11. It's a solemn and a somber occasion, a milestone in American history that really did change the course of U.S. policy in a number of ways. Frankly, it's surprising, I think, that the president isn't there. Maybe it reflects a desire to move on, but, you guys will. What do you think? I think it's a little too early to move on.
Tina Fordham, thank you for those comments. Tina Fordham today on this September 11th. John, do the math, 22 years. And I believe the two events of my life where time stood still was the assassination of President Kennedy and 9/11. 1941 plus 22 gets you to 1963. And I dovetail that from Pearl Harbor to JFK, and now we're 22 years on from 2001, and Tina thought was really elegant.
I wonder how you think about that then, Tom, how to transition to marking this occasion in a different way, the absence of the president on a day like today from the traditional places, locations we'd expect him to be.
There's some nice notes out this morning on this, and this is not the first time a president has not attended one of the three sites in Pennsylvania, here in Manhattan, or at the Pentagon. Dr. Biden will be at the Pentagon today, I believe. But it's not the first time. There's been time where presidents were on the lawn. There was some other events as well. I believe Bush and Obama I would put there. But nevertheless, he's on a business trip, and he's on the way back, and he will meet with 1,000 first responders at Elmendorf in Anchorage, Alaska.
There will be a series of moments of silence through this morning. We will take all of them right here at Bloomberg on TV and radio on the 26th anniversary of the September 11 attacks.
We think there's more downside risk here as we go through the next few months.
When the yields move, they're going to move down and a lot.
The question is not whether things are declining, it's whether they're declining fast enough.
I think positioning has really changed, and you've seen that inflection in sentiment in the options market.
The bottom line is the Fed wants to slow things down. Don't fight the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market on the S&P 500 nicely positive here by 0.4% following a week of losses and pushing ahead to retail sales on Thursday, CPI on Wednesday, and the main event, Tom, going into the Federal Reserve a week away.
I take your point. I think this has not been said enough. There's a Fed meeting after the ECB meeting. It maybe has a little bit of import. Nothing's going to happen at it. It's a dead meeting.
Get some forecasts as well,
It's a live meeting. But, I take your point. You got to get to the Fed meeting. There's some data in front of it as well. But are all eyes on November? I think so. I think we've just leapt forward to a November analysis.
The hawks on the committee aren't screaming hike in September. If you listen to the economists on Wall Street, those that think we get another hike, I'm thinking Andrew Hollenhorst, Societe, perhaps Mike Gapin of Bank of America, thinking that risk still exists. They're looking to November, Tom, not September. The Fed wants to be patient now, wait to see if there is further evidence of a re-acceleration of this economy, which leads to an acceleration again in inflation. At the same time, they've got subtle signs that we're seeing a labour market slow down. There's so many contradictions at the moment, Tom. Way more contradictions in the data now than there were 12 months ago, where it was just clean. Bright green light, hike. Well, things are a little bit different 12 months later, that's for sure.
He talks about the last mile. He talks about, we've got to go to the last mile. We've been talking about this for 2 years, that you're going to go from Stanley Fischer's ultra accommodative, super accommodative, through neutral, some form of restrictive. Dominic Constant has used the phrase super restrictive, and now we got to go the last mile. And there's like 3 narratives, 4, 5 narratives.
It's the toughest mile. Sarah House of Wells Fargo came on the show months and months ago and talked about how hard that last mile would be. Torsten Slock of Apollo over the weekend put out a great deck, loads of charts, showed delinquencies climbing, bank lending. I'm sure he did, you just didn't read it. Bank lending down. And Lisa, if you just let that continue, this economy will slow down. That's the view of some people on the committee.
There is conflicting data, and you mentioned that. And I was speaking to one economist who said when you get conflicting data, this is actually typical of turning points. And when there is an economic shift, often things get messy. So what do? You wait and you average. The data still matters. It's not wrong. It's not that suddenly there's sort of this inaccuracy. It's just that it's not going to reflect things in a smooth line. So it makes sense for them to wait. The question is, where are the balance of risks for them? And that we just don't understand.
Well, we know how they've shifted, that's for sure. The balance of risks have shifted in a massive way. 12 months ago, the biggest risk for them was doing too little versus doing too much. And now, Tom, if you ask them that question, I'm not sure what the answer is anymore. Clearly, it's far more balanced now than it was back then.
And he's central banker to the world, and this is a world to have the former Italian prime minister on this morning was a great honor. Mr. Gentiloni, he didn't mince any words. I mean, it is a slowdown in Europe. He wouldn't go very staggy to your brutal and rude question.
Can I just say that you've nailed it, though? Never mind my rude question. Yeah. I think you've been on top of this, Tom, for the best part of 12 months. Is Europe just returning to what basically it was plagued with for much of the last decade, which is just low trend growth?
Well, it goes back to the
60s
and 70s. The German economists who came up with the phrase Eurosclerosis. And, I think on this August day where Mark Gurman's going to launch Apple products, basically monetary theory, there's directly linked to the fact that Europe's dictating what cord Tim Cook can use to plug in to the new iPhone. I mean, that's part of it. Regulation. Eurosclerosis is more about regulation in a business environment within Europe. Maybe it's there, maybe it's not.
This is what Europe's wanted for ages, Tom. They want to set the rules. They want to make the rules. Everyone else is looking to build a business.
Yeah,
they want to make the rules.
It's the American divide, the transatlantic divide.
That's the bureaucracy of the European Commission. Let's turn to the equity market. S&P 500 futures here up by 0.4%. Elevated yield higher as well, TK, by 3 basis points, 429.20. Tons to talk about in foreign exchange.
In foreign exchange, it's there. Also, the 10-year real yield published moments ago on the Bloomberg terminal, 1.95, migrates up 2-3 basis points. back towards a 2 level, and it's that vacillation you do see in foreign exchange. Yen stronger. We covered that in the last hour.
Lisa, dollar yen 146.87.
Big question here about what's going to happen with the Bank of Japan. Ahead of that, we've been talking about the big week ahead, and you mentioned the Apple launch of the iPhone 15, which does come tomorrow. Very curious to see how much this offsets some of the negativity that we've heard recently, in particular having to do around with China and growth there, whether they can offset that with wanderlust. We will discuss. Tom will not watch. Wednesday, U.S. CPI coming out. People will not be talking about the headline figure, which is going to be buoyed by the oil and gas prices. But the core CPI, when you strip out energy, when you strip out food, what do you get in terms of how quickly it's disinflating?
Lisa, killer chart. For those of you on radio, it shows the quiescence there pre-pandemic, and then boom, up we go. What are we back, Lisa, about a third?
Yeah, well, we're back about a third. But as you were talking about, it's the last mile. And we're talking about some other components that are turning around, like housing and some of these other areas. Healthcare costs very much factoring into PPI coming out on Thursday, and retail sales we also get on Thursday. Some people expecting consumers to actually stop spending because maybe the savings is actually starting to run out. I'm sure we'll hear all about that. The ECB meeting, though, very much in the forefront of everybody's minds, just given the dilemma that was really laid out by the European Commission today. And John, I think that what we're seeing right now is an increasing ability to pause and an increasing ability to say we can have patience and take a look at the data, and we're not going to hurt things and encourage inflation further. How that's different with Christine Lagarde and Jerome Powell, it's a different kind of conversation. It's a little less comfortable for Christine Lagarde.
Much, much less comfortable for President Lagarde for the ECB this Thursday. Joining us around the table, Christina Hooper, Chief Global Market Strategist at Invesco. Christina, good morning to you.
Good morning.
We also need to talk about union disputes, UAW, the Detroit Big Three. Can you tell me from your perspective, is that just a headline risk we're reading in the papers right now? Or is that a symptom of a broader, stronger, hot labour market in America that's going to lead to higher costs for some of these companies?
Well, I would argue that it's more likely the latter. And that's because we saw Walmart's announcement last week about lower wages for new employees. I think actually because the labor market has eased a bit, it's tight, but it's not as tight, that what we're seeing with the UAW is probably more of a rear view mirror issue than what we have ahead of us in terms of what I expect to be moderating wage growth.
You have a shingle from Cornell, which is, some would argue, the #1 labor economics program in the country. Good morning, everyone from Northwestern as well. This is not Walter Reuther's UAW, is it? Explain to us right now your view, Christine, with all your study at Cornell on the atomization of the American labor economy. Is it legit, or can there be a reunionization?
Well, there certainly can be areas, and we've seen moves in different industries towards more unionization. But the reality is that that is a function of the tightness of the labor market. And directionally, the labor market is getting less tight. And so I would anticipate we see less of this activity in the future. This was a very unique environment that we've lived in the last few years, and it really has opened the door to the potential for unionization. But I think going forward, it will be very specific industries where we see this happening.
Rear view mirror. To me, that's fascinating. The idea that you're saying that this is not going to be what we're going to see going forward. And so from your vantage point, what does that mean in terms of the last mile of inflation that we were talking about, and how quickly we can get back to the 2%, how much conviction you can have to go back into longer term bonds?
Well, the last mile is going to be hard, but I do believe that we are very much on that disinflationary trend. Not every data point is going to support that narrative, but that will be the case. And actually, I'll point to something that came out last week. Chicago Fed economists put out a note utilizing their model. They anticipate we'll get close to the Fed's target by the middle of 2024 without a recession. Now, my opinion is it'll be a bumpy landing, but it won't be an actual recession.
So there are two schools of thought with this, and it's really highlighted by the Morgan Stanley view of things, and then the sort of Jim Bianco view of things, increasingly the JP Morgan view of things as they ratchet up some of their yield forecasts, that when we go back to something more normal, bonds will maybe have lower yields than they have now, but not significantly. Morgan Stanley is the lone bull, right? They're going out there. Matt Hornbach, who is a friend of the show, has said, no, he still has conviction. Buy now. This is the time to do it. Are you in agreement with that?
Well, I would argue it is so hard to market time, so that it makes sense to at least start to increase exposure now, even if one is not sure that we've actually hit the peak. I think this is a time to be starting to increase allocations.
The vector, we brought this up a couple times today. I'm not going to let it up. I think it's so important and timely to October 6th. And that is the vector of 3-month annualized non-farm payrolls. Wow, is that moving in a strident direction south? Can you frame a negative non-farm payroll statistic?
Well, what I don't have a lot of negative things to say right now about the state of the labor market. What we have is labor force participation increasing.
Saw it, yes.
And we have wage growth moderating. That's what I need to see. Those are the two most important data points within the jobs report, in my opinion. Also, if we look at JOLTS and we see the number of job openings, they've gone down significantly, all pointing in the right direction to maybe not a soft landing, maybe a bumpy landing, but one in which we see a moderation in wage growth, one in which we see a moderation in inflation going forward.
Doug Cass writes in, raises an important question about the Detroit Three. Let me throw it at you, Christina, if I can. Deglobalization, doesn't it just give these workers in Detroit more power, more leverage over their employers?
Well, one could argue that deglobalization has an impact and serves to boost inflation in a variety of different ways, including potentially this way. But the counterbalance, of course, is technological innovation. So could we get to an environment in which we're a bit above the Fed's target in terms of inflation for the medium term? Yes. But I think the Fed's willing to tolerate that because we also saw inflation below target for some time.
Christina Hooper of Invesco. Heard that a few times, haven't we, Tom? A tolerance for a higher inflation story from the Federal Reserve. That was not the conversation in 2022. It was 2% is 2. And now it sounds a little bit more like what the former Fed Vice Chair Rich Clarida discussed, which is 2 point something.
Christina's colleague, Christina Katmany, stopped me cold before Mike Bloomberg introduced John Williams and Mike McKee the other day in a brilliant conversation. She modeled out 4%. 4% is a new level.
If you're just tuning in, welcome to the program. Sorry, Tom, I thought you were done. Equity futures on the S&P, positive here by 0.4%. Neil Dutta of Renmac writes in, finds it curious.
Never writes to me.
The consensus appears to be talking about a US growth slowdown as a foregone conclusion, despite having been dead wrong about growth for the last 3 quarters.
The humility, and I think you heard that with Christina Hooper, the humility that's in order right now with the 14 narratives. I mean, how many porridges is Goldilocks testing right now? Not 3, like 6.
Not
8.
Too hot, not too cold.
Yeah, I mean, this is it's a cliche. It's original territory. Can I tell you who the Detroit Three are?
Go on.
They're not the auto companies. They're Gordie Howe, Al Kaline, and Barry Sanders. Barry Sanders. That's the Detroit Three.
Okay.
Cass knows this.
All right.
Al Kaline chewed up Sandy Koufax.
We're talking about baseball.
Baseball. Al Kaline.
Dodgers.
Right field.
Versus Detroit.
I had his glove. I actually had an Al Kaline glove.
Koufax was Dodgers, right?
Very good.
Yeah.
Nailing that.
Okay, thank you.
Thank you.
Appreciate it. Keith Lerner of Truist Advisory Services is coming up at about 8 a.m., so about 45 minutes from now. We're going to be talking about a range of things, including the economic data this week, with CPI coming out in a couple of days' time, and it's on to retail sales on Thursday. Mentioned this a few times already this morning, but it's the quiet period for the Federal Reserve, so no Fed speak whatsoever going into that decision about a week from now, a week on Wednesday. Lisa, in the middle of all of that, big event this week, never mind UAW, we'll be focused on that later on. But the situation with Apple, after the week that they had last week, the pressure to get some traction with this iPhone 15.
Especially because people think it's actually going to change the needle, that actually John Ferro, who doesn't want to upgrade his phone, is going to actually want to upgrade his phone as a result of some of the changes. This is actually part of the discourse.
The fanboys wrote in over the weekend, very upset about the slowdown, conspiracy theories. Yes.
Oh.
Very upset about it. Very upset.
Do you have anything to say?
Not really.
Okay.
Futures positive. This is Bloomberg.
I don't think it's going to cause China to invade Taiwan. In fact, the opposite, probably that have the same capacity that it had before. But as I said, we're not looking to hurt China. Sincerely. We're all better off if China does what?
The President of the United States speaking in Vietnam, addressing the tensions between China and Taiwan. Live from New York this morning. Good morning. Equities right now on the S&P 500 positive by 0.4%. A lift in the equity market. Yields drifting higher by 3 basis points. Your 10-year 4.2960. In foreign exchange, Tom, the euro just a bit stronger here. 107.24. Positive on that currency pair by 0.2%.
It's going to be interesting to see. And John, today we have a president traveling back from the Pacific Rim at about 4 o'clock our time this afternoon, maybe nearer to 5. He will honor and remember September 11th in Alaska on his way home. But before that is a modest note, John, and this is going to be early this morning. This happened maybe an hour ago. The president visiting the John Sidney McCain III Memorial in Hanoi. And this, of course, is part of our youth and part of our childhood of these prisoners of war in Hanoi, which makes even odder the clumsiness that we saw yesterday.
What did you make of that news conference yesterday?
I got to be careful here. You know, I'm not like Anne-Marie Horton. I have the surveillance court where Anne-Marie can go on about this with some authority. But I just think it's been a president who for months and months and months has been managed in his press conferences and his appearances, and he clearly showed up in Vietnam as anyone would, I would, tired from a strenuous G20 meeting.
Not controversial to point out how managed he was, because he talked about that himself in the news conference.
Yeah.
It's the way it was cut off, Tom. The way it was cut off was pretty strange.
Yeah.
To cut into the President of the United States, it's something that we wouldn't even do as journalists. So to see his aide do that was kind of bizarre, mid-sentence towards the end there, to cut in and kill the mics.
On the other side of the world, in Hanoi, and the president again traveling to Alaska and then home, Anne-Marie Horton now with perspective, with balance of power, and this is something she and Joe Matthew look at 24/7. I'm just going to cut to the chase. How's the president doing?
Well, I think if you look at that press conference, there are concerns because he was rambling. And to John's point of being cut off, it almost felt like the Oscars. If you were watching at home, the White House feed, you actually heard music over the president. So that's usually the cue to stop talking, even though reporters were asking him questions and he wanted to answer. His press conferences are managed in the sense that you know if you're going to get a question, they choose 5 people, but no one's asking you to give your question up, what are you going to say? But of course, they have a list of people they're going to give questions to because they want to make sure there's a variety of journalists in the room that have different perspectives. What was interesting about that press conference, though, was the rambling. Weren't really sure where the president was going in some of his answers. He brought up at one point a John Wayne film, and he wanted to get to a quote in the film. I have not seen it. Maybe you have, where he talked about
John memorized it. I mean,
a lying
dog-faced pony soldier.
Yes, and he was saying that there are many individuals in the world who are that way, lying dog-faced pony soldiers when it comes to global warming. And it was just confusing for people to follow.
Did you get anything of substance out of that news conference yesterday?
What I got out of that news conference was that he is at least sticking to the tone when it comes to China, which is that he wants what he wants it squared away. He wants China to follow the rules. He wants it to be an up-and-up relationship. They're not trying to contain China. He said we're not trying to decouple. They're de-risking. Or that was Kamala Harris who actually said that in an interview. But this is the point of the administration this week. A lot of questions about China, and he said, I'm not trying to contain them. They just need to follow international rules of the road.
The former VP, or rather the current VP, says she's ready to go. That's new, isn't it, over the last week, to actually say that on the record?
Yeah, she said this to Associated Press and also to Margaret Brennan and Face the Nation. She was at the ASEAN summit. She was asked, do you feel like you are prepared for the job? In the AP interview, she just said yes, and then the interviewer said, well, explain to me how you feel like you're prepared. And then she caveated that with, there's really nothing at this moment to prepare for. Joe Biden's not going anywhere. But it did take some people by surprise, but how quickly she just said yes and stopped.
Well, at this point, though, the reason why people are grasping to that is because of the polls, is because of the concern about some of these rambles or some of these issues, not to mention what we're seeing on both sides of the aisle and other people who have been in service for a very long time and are being raised some questions about their health. At what point do you start to hear with your ear to the ground a sense of who could potentially run instead of President Biden if this starts to get enough critical mass?
Well, at the moment, the Democrats are all rallying behind Biden, even though behind closed doors or there's whispers, everyone is concerned about his age. This is an individual, he'll be 83 next November. There are concerns about his age. No one is doubting, though, that he is going to run at this moment. I mean, and you see the push from the campaign. They're releasing millions of dollars in advertisements about this president. If he was going to step aside and there would be potentially a new candidate, I think you have to look to the governors, the executives almost of these states. You have Gavin Newsom of California, which I know impressed a lot of people recently. He sat for a very long-range interview with Sean Hannity on Fox News and really seemed to control that narrative, came very well prepared, and he's doing a little bit of a national tour in that sense. Then there's someone like J.B. Pritzker, the governor of Illinois, who could write the checks. You know, he is the heir of the Hyatt. So these are kind of the individuals you'd be looking for. And then, of course, there is the vice president. But at this moment, it doesn't seem like there's a lot of rallying support within the Democratic Party for her to take over to be the standard bearer.
As he heads to Alaska, does President Biden leave a G20 emboldened or weakened, really, given that some of the focus is less around the substance and or some people would say the pomp of some of these events and more on some of these other issues like the speech?
Well, I think optics will be about the speech. Optics will also be about the communique. I mean, the communique regarding the war in Ukraine has really irked the Ukrainians this morning. They don't even mention Russia's invasion of Ukraine. They talk about making sure that there's no countries that are going after another country's territorial integrity. That is a big walk back from the communique we saw at the G20 in Bali. But what you'll hear from behind the scenes from U.S. officials that these are just words. What's actually happening is that China actually left a huge hole by not attending this G20. India was able to have a successful G20, and the United States and other countries were able to coalesce around the global south. India, South Africa, Brazil. They want to make sure these countries are on board.
I want to bring it back domestic. And I'm going to do this. And folks, I should point out that Michael Bloomberg, the principal of the shop and his TV and radio network as well, wrote an essay on immigration this weekend. 1976, Ford on a different topic to New York City. New York City dropped dead. There it was. I can remember it clear as a bell at the time. Where is the dynamic in your Washington about any of the given cities, including New York City and the migrant crisis that we have? What is the administration going to do?
Well, what's fascinating about this is that what you see is a Democratic mayor, a Democratic governor come out and really put the feet to the fire of a Democratic administration for more help when it comes to the migrants in these cities. This is going to be a huge fight starting this week as we potentially have a government shutdown September 30th. What you see is the administration asking for more Ukraine aid. Speaker McCarthy is going to have a rough time getting that through on a continuing resolution to keep the government open. So potentially he wants to cipher that off and put that with more funding towards the border. But with that would also come controversial asylum provisions. So this is going to be a huge debate this week when it comes to federal funding on the border, but also potentially.
Do we have time for debate, or do we have time for?
You have.
I don't mean now. No, I don't mean us.
About 60 seconds if you want
to debate.
I don't mean
us. No, but John, it's just the whole debate here, like the urgency here. The leaves are changing. It's getting colder, and I wonder.
We're talking about immigration in New York.
Migrants in New York or Chicago. The Guardian had a wonderful essay this weekend on Chicago, compare and contrast with New York. It's not just New York.
So first and foremost, we should all be deeply uncomfortable using people to make political points. But the point that Greg Abbott, the governor of Texas, has made, regardless, is an incredibly effective one. It is proven to a certain degree that this has always been a not-in-my-backyard phenomenon, which that New York has not had to experience in quite the same way. And now it does. Anne-Marie, they've got a different view on it.
They do. They're trying to set up places where they can put these individuals, and they're also don't have the infrastructure, the funding they feel need to adequately provide, because then it becomes a big humanitarian crisis.
MH, it's good to see you here in New York.
Wonderful.
More from Anne-Marie through the morning, right here in New York City. Equity futures on the S&P 500 just about positive by 0.4%. From New York, this is Bloomberg. Stocks near session highs in the equity market on the S&P 500. There is a lift here across the board on the S&P, on the Nasdaq as well. Equities on the S&P positive by 0.4%. On the Nasdaq 100 up by 0.6%. On the Russell, the small caps elevated by 0.56%, following a week of losses on the S&P 500 for the first full week of trading for September. In the bond market, 2-year, 10-year, 30-year. Your curve looks like this morning. A 2-year moving away from 5% at 498.84. A 10-year yield pushing higher by 3 basis points and getting closer to 430 at 429.40 on a 10-year. Yields higher by, let's call it 4 basis points on a 30-year to 437.82. Going into CPI on Wednesday and going into retail sales on Thursday. And to finish in foreign exchange, the euro just a bit stronger through the last couple of hours, positive by 0.2% against the dollar. Had a look at 106 last week, back to 107.26. Our conversation with the Commissioner on the Economy, Paolo Gentiloni, about an hour ago, Tom, on the growth forecast, lack thereof, should we call it that? Cuts to growth forecast out of Europe earlier this morning.
We played this banner for radio. I'll explain this carefully. A lot of people in earnings and economics are going back to, okay, where were we in 2019? Which I think seems to be a valid idea. Top-line GDP, including inflation, the United States, John, from the end of 2019, up 24%, all that stimulus, life is great. In Europe, I was thunderstruck running a 2% rate, up 8% over the same period. That is the euro-US difference.
And are we going back to all of that? Low trend growth in Europe based on a forecast we've seen this morning. Throw in Germany too. This is something we didn't have time to talk about with the Commissioner, Tom. The fact we've had recession there, basically, stagnating growth, and we still have an inflation problem. And there are hopes here that if you get softer growth, inflation goes back to target. It's not the experience of Europe over the last year.
Are they having the 3-month annualized thing? Nick Timmerus in the Journal today, Mike McKee mentions that he's been doing it for 3 weeks, 4 weeks, hell, on his Western tour. The basic idea is disinflation is in place in America. Can Lagarde say on, I believe it's Thursday, that disinflation is in place in Europe? I'm not so sure. When I look at Brent, $90.34.
Certainly not with the same confidence, that's for sure. Under surveillance this morning, the President of the United States, President Biden, confirming his meeting with China's Premier Li Qiang at the G20 summit over the weekend. This marks the highest level meeting between the US and China in 10 months. Also at the summit, leaders backing a new plan to link trade between Europe, the Middle East and India. Leaders also acknowledging the war in Ukraine, but failing to jointly condemn Russia's invasion of it. AMH talked about that, TK, a few minutes ago.
Yeah, well, I guess it's there. It was a G18. Some people were saying, and Jess, you know what? Part of diplomacy 101 is you got to show up. The president showed up. I mean, it's just that simple with a bunch of other people, given all the different challenges that are out there. I sort of think it was off our radar. Tina Fordham was saying it was a bigger deal maybe than I thought, but, you know, I could be wrong.
We won't be talking about it tomorrow. It's basically what you're saying. President Xi, of course, did not show up. SoftBank's ARM looking to raise the price range of its initial public offering, according to our reporting here at Bloomberg. ARM filing for its IPO at $47 to $51 per share, which would value the company at nearly $55 billion, below the 60 to 70 range saw earlier this year. There is another IPO in the mix for this week. Instacart, Lisa, setting its price range this morning at 26 to 28 per share and looking for a NASDAQ listing with the ticker CART.
Well, here's the issue. And it's sort of similar to ARM in the sense that the valuation that's being talked about out there is substantially lower than where it was valued just months ago. In the case of Instacart, though, it's a significant decline. It's being valued at about a quarter of what it was valued, $39 billion 2 years ago. So you take a look at this and you say, are these specific to the names, or is there something broader here about a revaluation of a lot of private companies that has yet to percolate into the system in terms of solidifying some of those losses and solidifying some of that new valuation?
Wegmans, Costco, Food Bazaar, Fairway, which is an iconic New York shop. Have any of you ever done Instacart?
Yes. It used to have to deal with Whole Foods back in the day before Amazon bought it. So if you did your online shopping through Whole Foods, pre-Amazon acquisition, you did it through Instacart. Here in New York,
What'd you
anyway.
think? I mean,
it was fairly decent. It was the same as all the rest, Tom. They send out couriers, they go pick up the shopping, they deliver it.
Do you like
basically
other,
the model?
Do you like other people picking out your fruits and vegetables for you? I have a thing about that.
I'm on a warpath right now. with
Just fruits
Amazon
and
Whole
veg?
Foods.
Yeah.
Meat as well?
Yeah, well, meat is actually, to me, they can pick the meat better than the fruits and the vegetables. I always get, soggy.
They make bad choices.
Yeah, like it's not the same kinds of fruit choices and fruit knowledge that I would like deployed with my selections.
Should they be going? Why are they going
paying
public?
for high-level fruit knowledge? Would be
well,
my
I go
question.
personally for high-level fruit knowledge.
Can I ask a dumb question? Are they big enough to go public? I mean, why are they? I mean, they're going public so somebody can cash
Well,
out. Right?
TK precisely for them. Yeah, I was looking at the numbers and it looks like that.
And ARM, you're more knowledgeable in ARM than we are. It's a British thing, and SoftBank's coming in. Am I right that they're coming in with big companies helping out because they're sort of protecting each other
Essentially,
strategically?
I think ARM is super unique, Tom. We used to talk to ARM and leadership at ARM every quarter in London, going back 8, 9, 10 years ago. Tom, this company's been around for a long, long time. It was absorbed by SoftBank. They're spitting it back out and sending it public again. It's just not the same. I don't think you can compare that to, say, an Instacart or a startup that's been doing loads of private rounds and it's going public. It's just not the same thing.
Yeah. Okay. You got your 8,000 shares?
Yeah, I'm ready.
Okay.
Nicely allocated. Can't wait. Not at all.
This is
final story, Tom.
Yeah.
I want to finish on this one.
Yeah, it's tough.
Important.
Tough.
A tragedy strike in Morocco. After the deadliest earthquake the country has suffered in 6 decades, the race is on to find survivors with more than 2,000 people. TK, it's just dreadful. 2,000 people potentially believed to be dead. The 6.8 magnitude quake struck late Friday, devastating a region dotted by small towns and villages with homes made of mud brick. And Tom, I just don't see how the IMF gets together in a couple of months' time and heads over here.
Received an email this morning, this through Bloomberg Security, and it's under debate. I don't have anything to say about what the IMF would or should or can do, other than I know that Christina Georgieva and her team will be riveted to this as a humanitarian emergency.
Absolutely.
This is down the coast, away from Casablanca. This is not all the images we have of Morocco, which are mostly wrong. And this is agrarian, mountainous, cold at night, and very poor. This is 50, 60 miles southwest of Marrakesh.
And you'd have to imagine, Tom, that's where the IMF would like the focus to be, on the rebuilding, on
They
the
gotta rip up the
humanitarian
script.
effort, and not on the economic get-together and having a look at the rest of the world and throwing out some forecasts and all of that happy talk. Not the time or place.
I was immediately in contact with their people. They got back to me right away on the potential here, and it's, as you can well understand, under discussion of how they can assist with the World Bank, with the Red Cross. This ongoing tragedy. 2,000 to me seems like a low number.
That's the latest, Tom, this morning.
Right now, we will go to the markets here, and as John mentioned, we do it with a buoyant stock market. Futures up 20. Subadra Rajappa joins us now, head of U.S. rate strategy at SocGen here on the 47 narratives that were out there. You had to pick a narrative this weekend to go with on Monday, Subadra. Which is the SocGen narrative right now on what rates will do?
I think for the most part, it's going to be wait and see, at least for this week ahead of FOMC next week. Broadly speaking, if you look at the price action that we've seen in the bond market, the front end seems to be very anchored to Fed expectations. The Fed's going to pause at the September meeting. Whether they hike again in November is yet to be seen. But the data that we get this week will kind of guide the dots for next week, as well as set the trend for what potentially the Fed could be doing in November and beyond. So in that sort of context, range bound markets for the next week or so, we did get a ton of corporate supply that's been pushing 10-year yields higher. We could probably see a little bit more of that momentum, but really you're going to need more data to direct the markets from here on.
What's your take, Subadra, on the implication from the latest missive over in Japan about potentially ending yield curve control, as well as negative yielding policy sometime in the near future, and having a better sense of when that would be appropriate by the end of this year? Does that change your outlook for U.S. yields, given the incredible buyer base that we've seen coming from Japan?
Absolutely. I think that we've seen a pretty decent change in the trend and momentum in yields in August. Granted, it's a quiet month, but we had the Fitch downgrades. You had the change in the YCC policy. That's definitely putting some pressure on yields, not just in the U.S., but also globally. But we'll have to kind of see how things play out, because at the same time, while they're adjusting policy, you're also looking at a broader slowdown. Europe, you're starting to see a slowdown in growth there. In the fourth quarter of this year, we'll probably see that the U.S. economy will also start to come under pressure as the consumers start to pull back a little bit. We've seen a summer splurge. Consumers have been extraordinarily resilient. But with student loan moratoriums expiring, savings rates starting to decline, delinquency starting to go up, I think that you're going to see a lot more pressure on the consumer in the fourth quarter of this year. And that, again, is something that could probably keep a lid on the rise in yields in the U.S.
Does that give you more conviction to buy in the government bond space and less conviction to buy on the credit side of things that might be more affected by the weakness?
That seems to be where you would want to put your money in if you think that there's going to be a meaningful slowdown in growth in 2024. We've always had a recession in 2024. We're moving perhaps away from a recession in the early part to more the mid part of the year. But, if the recession is still very much in the cards, and if that were to play out, I think you should start seeing a moderation in yields, or the sell-off in yields we've seen in the back end.
Subadra, I've got to buy a bullet piece on the curve. Which maturity, full faith and credit right now, is most attractive for price up, yield down?
The front end is definitely very attractive. The market, in my view, is fully priced in for high for longer from the Fed. So we're basically pricing for the Fed on hold until perhaps the second half of next year, and only modest cuts after that point on. So in this sort of context, it probably feels that the place you want to be is the very front end, because if the economy does start to slow down and the Fed starts to pivot towards easing or easier policy, then you're going to see the front end start to rally.
Hey, Subadra, it's good to catch up and get the view from SocGen. Subadra Rajappa there. Oh, the bond market, the 2-year still very close to 5% at about 4.98. Your 10-year close to 4.30 at 4.29. Your 30-year very close to 4.40 at 4.38. Yields higher across the curve from the 10-year out, Tom. The longer end just a little bit higher, shifting higher by 4 basis points on a 30-year this morning.
Yeah, I would watch the 2s10s, 70 basis points. It's going to be interesting if that narrows and comes in.
If you are just tuning in, welcome to the programme. The S&P positive here by 0.4%. Up a little bit later, about an hour from now, Tom. Claudia Sahm, former Fed economist and founder of Sahm Consulting, is going to join us at 8:30 Eastern Time. 8:30 here in New York.
She looks like a genius back 8 months. Everybody quoting the Sahm rule and recession state by state and all this. And basically her message was, would everyone calm down? Right now, I mean, she'll be wrong. Claudia will be wrong in 2025. We've got that on the calendar. But for right now, she's been, would everybody calm down is, on the edge of data.
I wanted to squeeze this story in, Tom. Apple this morning extending an agreement to get modem semiconductors from Qualcomm for 3 more years. TK, this is something I know you're focused on. Apple at the moment, of course, in focus for the iPhone 15. This is a story elsewhere. Qualcomm's surging off the back of this news. Tom, we'll catch up with Mandeep Singh of Bloomberg Intelligence a little bit later in about 5 minutes' time.
We got to get the photo of me talking to Matt Miller on the sidewalk at the Apple store umpteen years ago. I think it was raining. I had an umbrella on. Apple was going to die. It was going to go out of business. It was over. It's done. Finished. I can't remember why. Doesn't matter.
We've done that enough times, right?
Yeah. And are we doing it again right now? I mean, the gloom, it was not China gloom, but it was gloomy this weekend.
The significance of this particular story is that there was discussion around Apple creating their own chips and what that would do to Qualcomm. And it seems like that chip isn't quite ready yet, giving Qualcomm something of a lifeline after not seeing the business really expand as much as people expect in China.
The stock taking that lifeline and running with it. Qualcomm up by 8.5% in early trading. Mandeep Singh of Bloomberg Intelligence on all of that news up next from New York. Good morning.
We think there's more downside risk here as we go through the next few months. We're underweight technology as per your conversation for a number of reasons, not least because the US tech sector is trading above a 60% PE relative to global equities. The tables look stacked against global equities, US in particular, and tech at this point.
Jonathan Stubbs, equity strategist over at Berenberg. Two names to look at this morning, Apple, Qualcomm. This story just dropped moments ago. Apple extending an agreement to get modem semiconductors from Qualcomm for 3 more years. This from Qualcomm. The new pact will cover smartphone launches in 24, 25 and 26. There was the potential, Tom, that the iPhone coming out this week would be one of the last to rely on Qualcomm's modem chip. That stock is up in a pre-market by 8%. That's Qualcomm higher by 8%. Apple nudging a little bit higher after a tough week last week.
Yeah.
Going into that launch, Tom, for the iPhone
Tom
15.
Keene, modem technician. What do I know about modems?
More than me.
All I know is the EU says you got to put a different code in to get to the modem, and I don't.
You're so much more up to speed than that. Give me a break.
I'm looking at the chips. I always go to the chips as well. Joining us right now, Mandeep Singh. We've got to go right to this. It's so important. Senior Apple analyst for Bloomberg Intelligence as well. And also surveillance tennis expert. Let's digress here. Rip up the script right now. I could hear people in buildings cheering. That was one hell of a final men's tournament, wasn't it?
It was, especially the second set was epic. I mean, you don't see those kind of rallies.
36 years old?
It felt like he was faltering at one point, and I've seen this a million times with Novak. It looks like he's lost his legs.
You think he's faking?
Second set looked like he was aging. I was ready to say Novak's got old, and then Novak got young again. Mandeep, that was kind of the way it went in the second set.
The fatigue, and the response.
Long, right?
And look, I mean, the guy is clearly, a lot will argue about it, but he's the GOAT when it comes to the slams, and probably no one can beat his record.
When he comes off the court, he doesn't go, I'm going to Disneyland. He goes, I'm going to Cupertino to buy whatever the new toy is. How is this week going to go for Apple? I mean, away from the modem news, do you got a thumb up on all this soiree for Mr. Cook and all?
I think with Apple, you have to think about the features they're going to introduce in the phone. And it's not a guarantee that we'll have a big upgrade cycle. That's why these events are so important, because time and again, we have seen the big upgrades come when they introduce new features, whether it's a camera or something else in the phone. And there has to be that element that's going to rush people to, upgrade their iPhones. And it's not a guarantee.
Well, this is a problem because they've been able to dress up poor unit growth with higher average selling prices. So if there isn't a big upgrade, where are they going to get the higher ASP from?
And that's never a good strategy to, extract more in terms of making people pay more because you reduce your install base. I mean, look, right now, Apple's install base isn't growing. Now, for them to take market share, they really need that new phone that everyone is excited about. And they are one company that hasn't talked about generative AI or large language models. You would argue a lot of the inferencing for those generative AI has to be done on Apple phones. They haven't even mentioned a word about large language models or generative AI on any of their calls.
So what's at stake in terms of the new creations in this new iPhone, right? What could they really move the needle with? Is it that much better of a camera? We've done that before. Is it just a faster kind of charging device? Okay. What could it be?
Well, so they have shown their Vision Pro demo, and clearly spatial computing is where the next leg of computing is going to grow. I mean, I'm not betting on metaverse, but clearly there's an argument to be made that similar to wearables, you could get a big pop in terms of, the Vision Pro devices and how it really expands the Apple ecosystem. In the end, it's about the Apple ecosystem and the vertical integration that they've been able to do over the last 2 decades.
So in other words, you're saying that instead of having a laptop or a basic computer, we're going to put on goggles and have our phones and be able to walk around and be in a computer.
You could argue that is the future, but that's not imminent. Like, it's not near term. It's all about what is it that they can do in terms of expanding the scope of your iPhone to really tailor it to the next leg of computing. And that's why I bring in the generative AI aspect, because Qualcomm has argued you are going to run your large language model on your phone. You're not going to do it on your cloud. That's what inferencing is all about. And Apple hasn't mentioned anything around it. So this event is quite important from
It's Mark Gurman's territory, but let's channel Mandeep Singh right now. Is there any discussion about what happens after Cook? Is there like a succession plan or an envelope and a desk, or like how long does he keep this going?
I mean, really, right now they're at a crossroads where supply chain diversification is paramount for investors. And until they fix this in terms of Apple actually diversifying their supply chains, Tim Cook is the guy to facilitate that.
Is this buzz about Huawei's new phone legit? Do you appreciate that buzz?
Well, I think it's very hard for Huawei to embed the latest leading node chip because, look, China government has thrown a lot of money in terms of building semiconductor manufacturing. But for them to get all the pieces right, chip, packaging, assembly, everything, it's very hard. And we know semiconductor manufacturing is very iterative. That's why TSMC is finding it hard to replicate their fab outside of Taiwan. So I have my doubts in terms of the phone being as good as an iPhone or...
Even if it's not as good.
Yeah.
Let's say it's 3 years back. Let's say it's like the iPhone 12, whatever. Are we missing the mood of a country shifting away from Apple? That's what I'm trying to identify. And if there is a mood shift, does it really matter whether it's the equivalent of the iPhone 12?
But why would consumers want a phone that's equivalent to iPhone 12? As a consumer, Chinese consumer, you want your hands on the latest gadget. And we know they're very savvy with all the app usage.
But if I wanted a better phone, wouldn't I just get a Samsung? There's a reason I buy this. And it's not just because it's a decent phone. The Samsung is arguably a better phone. It has a better camera. Has done for ages, but I don't buy the Samsung. It's the reason I buy this beyond the technology that it has. I've had it for a long, long time. I'm a part of the ecosystem. It's really, really sticky. But also at the same time, there's some brand recognition associated with this, even here in the United States. And I'm wondering whether that's changed in China, whether that's really the brand you want to carry anymore.
I don't think so. I think you're going to see a rush to upgrade, especially from Chinese consumers, before there is an explicit ban. Let's say. And in my opinion, everyone gravitates towards, the perceived attractiveness of Apple. And it's because of the ecosystem. It's a software. It's everything that's vertically integrated about an Apple ecosystem.
So how does the ambassador of Tim Cook address some of the concerns that have been expressed in share prices, if expressed by analysts at this launch, or even in the next couple of weeks, if he wants to maintain that kind of enthusiasm within China, while also maybe shifting and diversifying some of that risk?
Well, so they clearly have to work with the Chinese government. And so far, Apple has done a pretty good job. I mean, there is no other mega tech company that has 20% revenue exposure to the Chinese end market. And so to give Apple credit, they have been able to work through the issues. But clearly, I think from a China perspective, they want that local company, Huawei, to start making the phones. And that's why they're investing so much.
This is un-American. We got to change from Apple over to Pumpkin. I mean, this isn't this. I saw this like 3-4 times this weekend. You know how we rush it? We get Christmas decorations out.
I know.
Like November 1. Meg Terrell over at CNN with the action photo out on Twitter. Thank you, Meg. Their medical correspondent. Pumpkins now, it's 50 days to Halloween. John, you buy the orb right now. It's not going to make it, carved or uncarved.
It's an American illness, isn't it?
It's what?
Let's go.
Lisa, help me here. When should we be buying the pumpkin?
I'm all with you in terms of early decorations. Pumpkins are it's fall and they grow in fall, so they are harvesting pumpkins. But I'll take your point. So this is
like a pre-Halloween purchase.
Yeah, it's sort of like celebrating fall, and I can get behind the idea of that because you can see the leaves starting to change when you go, outside of the city. So I'm just saying, I understand that.
I had 3 of them last year.
I do agree though that pulling out, the Easter Bunny after Christmas is sort of crazy.
Yeah. January 1.
Yeah, January 1. All of a sudden, those like marshmallow. Easter bunnies.
It's like buying roses.
Really?
You want to do roses on Valentine's Day?
Yeah, you don't want to buy them near Valentine's Day. It's expensive.
No, you want to buy them the day after.
Day after.
Don't you?
They're on discount.
On sale. Mandeep, thank you. Mandeep Singh of Bloomberg Intelligence. It's a long, long story we don't have to go into.
We fortunately don't have to go into it.
Keith Lerner of Truist Advisory Services joining us in about 5 minutes' time. Really important week on several dimensions. We've got CPI and retail sales in America. The good news is the Fed isn't speaking, so that's the data and the Fed taken care of. Tom, on the company side of things, we've got that debate between UAW, the Detroit Big Three, negotiations ongoing, and we've got the unveiling of the iPhone 15. So plenty going on this week, that's for sure.
There's a lot. It's hugely going on. I'm going to go ECB as the top item, but we bust Lisa's chops about it, but the bottom line is it's a toxic brew. I'm not kidding. I mean, there's like
when have I been pessimistic today?
But there's a lot of toxic brewedness out there.
Super toxic, yeah. Equity futures on the S&P just pulling back from session highs. We're positive here by 0.4%. Yields are pushing higher by, let's call it 3 basis points on a 10-year, 4.30. And in foreign exchange, the euro just a little bit stronger. The euro against the dollar positive here by 0.2%, 107.19.
We're in a brave new world, as we call it, and there's lots of sort of shifting sands.
I think that we're entering a very important period here where there's probably going to be a handoff from the focus on inflation onto the real economy data.
That bullish sentiment has really waned, and what that has done is it's really taken the tailwind out of the market.
We don't believe there's hikes next year. We believe there are a hold next year.
The Fed, the ECB, they're stepping harder and harder on the brakes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Bloomberg Surveillance. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Mr. Ferro really diving into the 9 o'clock hour, getting set up there as well. Futures up 17, Dow futures up 38. VIX is not giving me much information. It's just sort of, I'm going to call it, Lisa, almost positioning Monday here on September 11th, and we'll see the Vice President in Lower Manhattan here in the hour at a remembrance at 8:45 of Flight 11. But it's just sort of a like get ready for the week Monday is sort of my feeling on it.
Yeah, it feels like there's nothing going on. It sort of feels like a lack of conviction Monday where people are just kind of waiting and nobody really has a sense of where they want to go, but they kind of want to tweak things around the edges and wait and see. It feels like a tipping point kind of moment, but it's kind of, filled with ennui almost. This sense of we don't know even what we're waiting for.
I don't know what ennui means, but it sounds good. We'll go with it this morning. I'm going to go with the 10-year real yield, 1.96%, showing the conundrum out there. Be honest, I don't know what the real yield is in Europe, but it's going to be real for Christine Lagarde on Thursday.
Brutal assessment from the European Commission. They're trying to maybe spin it slightly different by saying that maybe this isn't really a stagflation type of profile going out. But how does she grapple with this? How does she support economic growth, which isn't their mandate, by the way, while also dealing with CPI that's north of 5% in the region?
So, back when CPI was back like that in the middle 60s, I think, even the early 1960s as well. And of course, what we hearken back to in the 1960s is there was a 3-year period where I survived on Hostess products, Twinkies. They had this pie thing. We lived for this stuff. For our international audience.
Okay, that's not food. I'm sorry.
We need to stop the show now. Is basically grape jelly and peanut butter combined with grape jelly buys Hostess Twinkies.
People are eating breakfast. I'm just imagining right now.
We had
Hostess
Twinkies for breakfast.
Twinkies with peanut butter and jelly from Smucker's. So basically, if you're just joining the program, hold on a second. The actual news is Hostess Brands is going to be acquired by J.M. Smucker for $34.25 a share.
That's very good. You nailed that. Chart Banner, I sent an email to Chart Banner, I think it was Sunday. This was rumored over the weekend that this was going to be there. And I said, you got to be careful. You can't show the little pink snowballs. I hardly had those.
You hardly had those.
My sisters took the pink snowballs, but Twinkies were a food group.
Were they?
For a 3-year period.
And how did you emerge from that 3-year period?
I emerged from it healthy and, like every other kid trying to get to the next thing. I think I went from Twinkies to Genesee Cream Ale, but that's a different story.
Well, there is a bigger story here with respect to capital markets being open and some of these acquisitions. It's supposed to be acquisition M&A Monday, remember?
Scale.
And yes, so it's scale. There's a consolidation. But the fact that there's also the Instacart IPO that's also in there, especially after last week's issuance of corporate debt, the market is open. It might be slow, but capital markets are open, even at high yields, even at some of these concerns. Again, it doesn't feel like anything has broken from yields where they are, which raises this really deep question of why should they go down?
Peanut butter and grape jelly is bringing me an EBITDA margin of 21 cents on the dollar. We didn't mention this yet. We'll get to it quickly here before we get to Keith Lerner here with Truist Advisory. Lisa, we got to open up in Asia. We got to hire people in Asia. We're going to Asia. And then there's UBS off the Credit Suisse merger going, Maybe not.
Yeah.
That earlier.
Well, and we've seen this from other big banks, too, on Wall Street, right? I believe that Morgan Stanley cut back some of their staff in China as well. How much is this just because are they really even going to be allowed to do business in the same kind of way in mainland China, certainly, and in Hong Kong? Does it have the same kind of international position, given its interconnectedness with Beijing? I mean, it's sort of a question that you're not going to get an honest answer when you hear from any of the megaphones coming out of the big banks, just how sensitive it is.
9% profit decline there, but far more importantly, I'd link it into Goldman Sachs. It's the time of year. It's the time of year where people are right-sizing as well. On the data front, help me here, Lisa. Futures up 19, NASDAQ up 0.7% on the NASDAQ 100. I'm focused on yen, stronger, 146.64 off some Bank of Japan chat.
Yeah, speculation, not just speculation. Ueda coming out and talking about by the end of this year having a sense of whether they can move away from negative rates. I'm also just generally looking at dollar strength across the board that has faded. And now we are solidly in dollar weakness with the euro even stronger versus the dollar, despite what we heard from the European Commission. The idea confirming recession, 0.4% contraction in Germany's GDP, leading to this really subpar growth perspective in that shared currency region.
Right now, we're going to go into a conversation. Gina Martin-Adams later in the hour to round it out with Claudia Sahm. Right now, Keith Lerner, Chief Market Strategist, Co-CIO at Truist Advisory Services. And the major charm here, folks, is he is truly legit on the technical aspects across equities, bonds, currencies, and commodities as a CMT. Keith, thank you so much for joining. What do the charts tell you? We've got like 8 narratives going on. It just seems a jumble. Is the technical structure of the markets plural? Is it a jumble?
Yeah. Well, great to be with you and Lisa this morning, as always. I think jumble is a really good word, Tom. I mean, as we kind of talked before the break, as you look at the overall equity market, we think at this point it's not time to be on offense or defense, but be somewhat patient for a better opportunity to do so. If you look at the S&P itself, you're basically in a range, kind of digesting the big year-to-date gains. And you're in the middle of that range, 4,600 on the upside and about 4,330 on the downside. And there's not a lot of momentum. And I would say as we head into this kind of busy week, but also this month, there does seem to be a lack of upside catalyst as well. So again, we're just kind of, marking time right now.
Given the fact that it does feel like a muddle, that it doesn't really feel like there's anything screaming out, what does that mean? What do these types of muddles sort of serve in terms of turning points one way or another, both from a market perspective and economically?
Well, they can mean a lot or they can mean a little. Some things that we're looking for during this kind of churn, so to speak, is, what are credit spreads doing right now? They're relatively tight, so nothing sinister out of that. Sector leadership is really mixed as well. So I don't know that it's a bad omen per se, but what you're waiting for is to see what is going to come out of this as leadership. I mean, the one, as you look back to the equity markets, you're starting to see energy, obviously, the last month perk up. Technology, we know, the Apple launch this week has been more of a market performer as well. And then you're just seeing, you're seeing a little bit better activity out of some of the defenses, but not enough to say a trend change. So I just think it's not trying to say what the market's going to tell you. It's waiting for the market to basically speak up and see where that leadership's going to come from.
What's more important to you this week? We get a slew of economic data. We also hear from the ECB. Is that more important, or are the Apple's iPhone 15 and the potential for a UAW strike more significant for you?
Yeah, we have a lot to pick from this morning, don't we? I would say more on monetary policy. If I think about Apple, I mean, that stock's up 37%. Technology's up over 30% this year as well. So I don't know what big surprises we're going to get from there. I think the UAW will put some focus back on, inflation. But then again, we had Walmart last week, the biggest private employer in the world, saying things are softening on that side. So I really think it's about ECB policy, how that relates to Fed policy, and this U.S. dollar, which has had a lot of strength here recently.
Keith, I'm hearing a lot of macro analysis, macro this, macro that. Unfortunately, we'll do this with Claudia Sahm in a minute. Love her to death. Keith, how do you identify a second leg of a bull market?
Well, what you want to see is so we've had the big move up. We're still in an uptrend. We're consolidating these gains, not seeing a lot of distribution. What you want to see is urgency in buying out of this range, right? So you want to see the breadth of this market start to expand. You want to see the percent of stocks above the 50-day moving average get to 80%, 90%, just showing a real, demand coming in and urgency to buy stocks. And then you want the sector leadership to really start moving more cyclical and be more broad-based. That's what we'd be waiting for to get more bullish on the upside. Conversely, if you start seeing the defensives start to tick up and credit spreads start to widen, that would be a signal more negative at this point. But again, we're neutral, strongly neutral, Tom and Lisa, against stocks, bonds, and cash right now. And then, some people want you to always have a strong call, but today we're just giving us we're taking what the market's giving us, and we think that's the right place.
So what does strongly neutral mean? That's such a fantastic way to describe the sort of ambiguousness of this moment.
Well, as a strategist, everyone wants to say, hey, this is the time to buy or this is the time to sell. And sometimes when you say you're neutral, they think that you don't have an opinion. And we do have an opinion. We're strongly neutral, saying we should be more aligned with, where your long-term asset allocation, of course, stocks, bonds, and cash, sticking higher quality and not taking those big bets across asset classes. But I will say, where we've been taking bigger bets is we've been overweight the U.S. all year. We've been most negative on emerging markets. That spread is wide, and we're staying up in quality and in fixed income. And we don't think you're being compensated today for the risk that you're seeing in the high yield market or the investment grade market.
Keith, great brief. Thank you so much. Keith Lerner is with Truist this morning. The only thing I know, afterthought, strongly neutral on our math teacher. That's where we are.
Evidently.
We're like 3 days into the torture. And I said, well, what do you think of Miss Wang? And she said, I'm strongly neutral.
I think that both of my children are strongly neutral on their scholarly experiences. I think that that's really fun to listen to because he really raises good point, which is people think that means you don't have an opinion. But it does. It's just that, there's not a lot of conviction to push you one way or another.
Granted, we've had this titanic lift in rates, which is completely unusual, and it's wrapped around the pandemic and all that. But the heart of the matter is we really don't know how to act at these points, as Arian brilliantly says this morning, the last mile. This is all new. We really don't know what to do we?
And this is the reason why the Fed and the ECB are waiting, right? I mean, it makes sense. But at that point, so if you're an investor trying to get ahead of things, do you just basically say we can't? No, so then we're just going to be in the middle.
Lift of the market this morning on the Standard & Poor's 500 up 21 points, S&P up 0.5%.
It's a good point, though, in terms of when some of these higher rates, you talked about that surge in rates, when it's going to really become the norm where it percolates in so you don't have to say it's going to hit the market when it is hitting the market. And that's the reason why I think it's interesting that we're seeing the Instacart potential IPO as well as the Twinkies and the Hostess situation being acquired.
I mean, Smucker's been making money for years. I mean, they mint the money on it. Instacart, to me, I mean, I don't know anything about it. I'm not qualified to warble on it. But the answer is Instacart the kind of business that should be going public? I mean, are they like profit making, and are they going to become a Dow Jones Industrial member?
Well, I will say that they're being valued at about a quarter of what they were just a couple of years ago, which, again, is it because they have to kind of capitalize right now, cash out while they can for their owners, or is this that it's only going to get worse or it's not going to necessarily be as high a valuation? Either way, people are throwing in the towel. They're raising money despite the higher yields and despite valuations that are subpar relative to recent history.
In this 8 o'clock hour in New York, it is September 11th. We welcome all of you around the world. We'll have remember it's at 8:46, and what I think is so important, Lisa, it is not Manhattan and the Pentagon and Shanksville, Pennsylvania, but it is also a president returning home. He will be in Anchorage, Alaska today.
Not in New York or near the Pentagon, which is the cause for some concern. On a bigger stance, though, it is amazing to think that it's been 22 years. And it is still catastrophic and very present in people's minds who were here during
It has been
this
sport.
event.
It is September 11th. Thank you for joining Bloomberg Surveillance.
I think that we're entering a very important period here where there's probably going to be a handoff from the focus on inflation onto the real economy data, and it's going to be a slow process. But I think that I'll repeat what I just said. Yields probably go sideways for now, but when they make the next big move, it's very unlikely to be up.
Stephen Major of HSBC, and that is what Bloomberg Surveillance is about. What a difference, I believe this was on Friday, between Major looking for lower rates at HSBC and Lisa Abramowicz, Mr. Davis, Earl Davis, at BMO Capital Markets, Bank of Montreal, just flat out going the other way, looking for longer.
The gap between the bulls and the bears getting further and further apart. And I have to say, what happened overnight really confirms the uncertainty here. And I'm talking about the Bank of Japan in particular.
Yeah.
And the discussion of Ueda possibly knowing by the end of this year whether or not to end negative rates. That changed the scenario in markets. Is it going to have a lasting effect, and could it on the U.S. market for Treasuries?
That's one of the uncertainties out there. And what I would say over the weekend, you just sort of look at the zeitgeist, your eyes are glazed over, and you're looking at the computer screen, and the answer is the set of uncertainties right now are just extraordinary. And it's led by China. I think China takes top billing, but all these different narratives that we have clearly indicate, how do we get to November? How do we get to January? Where are we the 4th of July of next year? I have no clue.
I keep going back to Diane Swank, saying that she has the humility, and I do too, of saying, I don't fully understand all the different threads and how they're going to come together in terms of painting the new economic narrative.
Our thoughts to Diane Swank and all of the National Association for Business Economics, including our Michael McKee, that we're so close to what we saw 22 years ago on September 11th. Right now, we're going to dive into a conversation, and this is an informed discussion with a gentleman from Brown Brothers Harriman. Yes, currency is a litmus paper, but for Win Thin of Burma and for all of his work at Columbia, a good time to speak of the broader Pacific Rim. Win, my question for the day is simple. Are we going to see an export of disinflation out of a troubled China to Hanoi, to your Burma, and for that matter, across the Pacific to America?
I think that's the process that's in place. And to me, that's not a bad thing, right? We're central banks around the world, both developed and emerging, are fighting inflation. So, hey, a little bit of disinflation really isn't a bad thing. Now, the bad news is that disinflation is coming at a cost for China, right? We know that the economy is slowing much more than anticipated or desired. So it's a double-edged sword. But I think right now, with the market still focused on inflation, a little bit of disinflation is good news. But hey, we've got a long way to go before we can sound the all clear on inflation fight.
I've got to ask the question, Dr. Thin, that people want to know from you, which is, can yuan go round trip back to 2005, which is about an 8.20 level? Do we see an outright devaluation as a solution for a troubled Beijing?
Well, I think they've been trying to resist that. If you look at the fixings and some of the sort of measures at the margin, they've been trying to prop up the yuan. They don't want it to fall out of bed. At the same time, I don't think they can really do much against it. And we go back to sort of monetary policy divergences. As long as the People's Bank of China is in easing mode and the Fed is in tightening mode, there's really, to me, only one direction for dollar yuan, and that's higher. Again, they'll try and control it. I think the devaluation would be very, very dangerous because it would be bad for instance, Chinese corporates. They have a lot of dollar-denominated debt, and all of a sudden that debt becomes much more expensive to service. So for now, I think they hold off on the devaluation, but they lean against the depreciation. But again, it's not much they can do. It's like trying to fight the tide.
When we take a look at all of the stories that are kind of percolating, we were talking about the different narratives that are coming out of the woodwork and creating this confusing brew, I would say, more than a toxic brew necessarily. The one that stands out most to me is the Bank of Japan. And yesterday, what we heard from the Bank of Japan Governor Ueda was that if the Bank of Japan becomes confident that prices and wages will keep going up substantially, it will end its negative interest rate as among the options available, and that they will know this by later this year. How much does that change the game?
Well, it's really interesting. It tells you a bit about positioning, Lisa. I think everyone was long dollar yen, and we had these comments out of Ueda, but really, if you read between the lines, he's saying it's data dependent. You mentioned if wage and price pressures go the way they want, then maybe they can remove accommodation. It's to me, a very nuanced way of saying, hey, it depends on the data. And to me, the data is not so great out of Japan. Talking about wages, we just had wage data last week from July, much weaker than expected. The wages are not keeping up with inflation. So they're not getting that missing piece of the puzzle. So to me, the question is, well, how is the Japanese data going to go? And to me, it's been weakening. We had orders data out overnight, much weaker than expected. The domestic orders plunged 30%. So it's not just a China external story. Domestic activity in Japan is at risk. And I think that's the reason why, despite all this talk, and it is really just jawboning, the Bank of Japan is likely to be on hold for the foreseeable future.
So what do you take away from that? That positioning is perhaps overly weighted to a weaker yen, or that positioning is such that the reaction that we're seeing today, not just in currencies, but also in the bond market in Japan, is inaccurate and it's going to reverse?
Yeah, I do. I think the underlying fundamentals, again, we go back to central bank divergence. Bank of Japan on hold, the Fed is tightening. And that's going to, I think, really be maintained through year end. The positioning to me tells me that you had this sort of violent reaction to what I thought was a very balanced, nuanced comment. He said, if wage and prices go the way we want, then maybe we can remove accommodation. It's really, quite qualified. And he's not saying anything about really promising anything, as any central banker should not at this point. They should be very much data dependent, sort of staying nimble. Anyway, regardless, the violent reaction to me tells me that, yes, we're probably, the dollar rally has been going strong. Maybe we got a little overextended. DXY's been up 8 straight weeks. So, it's time for a little bit of shakeout. But to me, I think it's very dangerous to go short dollars into the CPI and PPI retail sales. To me, the data suggests that headline is starting to creep back up to 3.5%, 4%. Core is stuck near 4%. And that tells me that the Fed's nowhere near done. And I really think the market's underestimating the capacity of the Fed to tighten further.
Winthin, what is your dollar call out a year? I mean, it's an easy question with a really tough answer for anyone right now. What is your dollar call?
Oh boy, to me, a year is like an eternity in the market. That's a lifetime.
Agreed.
So I would say, look, 6 months out, I am very, very confident the dollar continues to power higher. Even between 6 and 12 months, I lose a little bit of conviction. But the way things are going in the rest of the world, the Eurozone's tipping into recession, UK are also tipping into recession, China's struggling. Yes, the U.S. will likely go into recession next year, and that's sort of where my call becomes a little bit nuanced. But if and when the U.S. goes into recession, then that's when the dollars can sort of, I think, start to go down. But we keep pushing that out. To me, it looks like the momentum, Q3 remains strong. It's going to carry over to Q4. So maybe mid-year next year we get a recession. I don't know. It's all anyone's guess. But that's, to me, is the game change for the dollar. When the U.S. goes into recession, the Fed starts to recalibrate its settings. Now, that said, I don't think they're going to slash rates immediately. If inflation is still 3-4%, I don't think they're going to turn around quickly.
Winthin, thank you so much for the brief this morning. Winthin of Brown Brothers Harriman and Claudia Sahm coming up, as well as Gina Martin Adams. So we've got a pretty eclectic way to get you to the 9 o'clock hour as well. I love what he said there, honestly, and he's a grizzled pro, about trying to get out a proverbial 1 year. I couldn't write a 7-page, like the way Anthony Dwyer at Canaccord Genuity does. He just throws it out. This is where we'll be in a year. I don't have a clue.
Yeah, I don't think we can game out where we're going to be in 2 days, which is the reason why Wynn was talking about how people are kind of hesitant to really make any big moves. He was saying it's dangerous to go short the dollar heading into CPI and PPI because people are underestimating what the Fed is willing to do.
Well, we'll see what the Fed will do. And I agree. You and John have mentioned this. We've got to get beyond the news flow this week down to the UAW strike on, I believe it's Friday, or I can't remember if it's midnight Friday or midnight Saturday.
It's midnight Thursday. It's 11:59 is when the deadline hits on Thursday.
And so then into Friday.
Okay,
so I'm glad somebody's got this figured out. But,
burning question for you, Tom.
Yeah.
Did you actually subsist on Twinkies?
Yeah.
For years?
They had these
3 years?
These fruit pie things that were painful. Smuckers to take out Hostess. It's a blue chip stock. Talk about free cash flow. Thanks, Dad. Futures up 23. Stay with us. Claudia Sahm next. Bloomberg Surveillance. It is September 11th in New York. We welcome all of you. Lisa Abramowicz and Tom Keene. John Ferro will be with you in the 9 o'clock hour. The elite meet to greet in downtown New York right now. We've seen former Mayor de Blasio, many others. The vice president will be in attendance today as President Biden is heading from India back through Vietnam and will be in Anchorage, Lisa, this afternoon, a different 9/11 for the President of the United States.
In Alaska, rather than New York City, one of the epicenter, or the Pentagon in Washington, D.C., on a day that still feels like it was very recent to a lot of people out there. I think that we cannot emphasize enough how it doesn't feel like 22 years.
And it doesn't feel like 22 years. In fact, I would even go so far as to say that it's harder every year for me. I believe this, yes, the vice president now moving to the ceremonies, which circle around 8:46 this morning. And of course, the first plane striking these buildings. And it's shocking when you read the history again and remind ourselves it was a 17-minute, I believe, differential between the first and the second hit in New York. And I think back then I thought it was like a 2-hour difference, and it wasn't.
And just
17 minutes.
It was. It feels very recent, just the visceral experience of the fall.
I think both of us struggle with it. Some other people do better, but there we are. And for all of you worldwide, we'll bring you some images of this at 8:46 and through the 9 o'clock hour. We do this with markets open as they opened after 9/11. Futures up 23, Dow futures up 79. And the yield space, higher yields. I'm going to call it, can we say it? I haven't used this phrase, Lisa, in months and months. Dare I say it's a risk-on feel today?
It is an ambiguous feel, I would say. It is a neutral, a strong, aggressive neutral that Keith Lerner was talking about, at least.
Painfully
in the
neutral.
Exactly, in terms of lack of conviction ahead of a massive week for economic data.
It'll be interesting to see. Joining us right now, Claudia Sahm, who's taking a Victory Lab, founder of Sahm Consulting, former Fed economist. Claudia, you absolutely nailed a good number of months ago when everybody calmed down about the recession game. Revisit that call right now. Can you calm down about the recession call, or are there datas there within the Sahm rule that says we must beware?
Right. So first of all, no victory laps. I'm not going to do that as a forecaster. It was very clear for well over probably 2 years that we had a lot of the inflation was driven by disruptions from COVID and then from the war in Ukraine. Right. So that's what we're seeing unwind. And markets have reacted well to that because as inflation comes down, that says the Fed needs to do not as much and we have lower risks of recession. And we've seen that. And so I understand why the soft landing has gotten popular. And yet I am concerned, right, as I watch the labor market data. So the payroll data, they were averaging 3 months, 150,000 through the last 3 months. That's half of what they were doing early in the year. We have seen payrolls cool off at a really steady clip, and they got to bottom out soon. Right? Like if things keep going south, that is what a recession looks like. So I think we're in this very hold your breath kind of moment with the economy in terms of now we're going to see, is this normalizing, getting back to pre-pandemic, or are we heading towards a recession?
This is a really important way to crystallize, Claudia, what a lot of people are looking at as encouraging news in the labor market. What about you makes you say it's a hold your breath kind of moment where we're not sure whether it's going to normalize or keep going south?
In the labor market, there's many key pieces that they get momentum going, right? So the unemployment rate starts out slowly and then it builds up steam, right? And we haven't seen the unemployment rate moving up. The Sahm rule, the recession indicator, is far from triggering, but that doesn't mean that by the end of the year, we're in a space where it's picked up enough steam and we're in a recession. So the labor market is so important because it really supports the consumer spending, and we've seen the labor market cooling off. We should eventually see signs of consumer spending cooling off. There's been downward pressure on inflation, but it's a really tricky needle to thread in terms of doing just enough but not too much.
Which really feeds into this question of whether what we're seeing with the UAW and some of the discussion around strikes and discussions around getting paid more is something of a rear view mirror, as we were talking about earlier in the show, or whether this is a precursor for what's to come, especially as there is a reglobalization or something of that nature going on. What's your view on that?
I think there's an aspect of it, particularly with UAW, that is a looking backward, right? We've had some years of really strong economy. We have seen big profits by the automakers, and they don't renegotiate these contracts every single year. So now is the time, right? And there's a lot of history. They took a really weak contract in 2009 because the automakers were kind of on the cliff's edge, and now the tables are turned, right? So I think this UAW, I think, is a very backward-looking, and I think it makes a lot of sense why they're asking what they're asking for.
Dr. Somm, there's a modest uproar in the United Kingdom about getting the eco data wrong, and that the eco data was pretty gloomy, and they're reassessing and redoing the math, the statistics, to a more optimistic United Kingdom. Do you have faith in our data? Could we be in for a data surprise out of the good people in Washington?
We need to be very careful about reading too much into a single data point. We're going to get a lot of data this week. You should look at the totality of the data, because if you hang your hat on one piece of data, we got revisions in prior months of payrolls. This has happened all year, right? We think it's strong, and the next month we find out it's not as strong. The New York Fed did some really nice analysis of the PCE core inflation, and there's a good band of revisions. Like right now, we could have something from 3.7 to 4.7. That's a big. That's a big band. So these are things that we need to keep in mind, and the Fed knows these things. Right. Like we think about revisions, but it makes it really hard. Right. Like we don't know what we think we know.
Claudia Somm with us, and we will continue with Dr. Somm. The 9/11 memorial, Mayor Adams with other assembled mayors, including Mr. Bloomberg. I had a sighting of Mr. Giuliani as well, and Mayor de Blasio. Along with them, the vice president and the governor of New York, Governor Hochul, Lisa. All looking to commemorate a day that feels very recent in the minds of most people in New York in this business, and comes at another pivot point. And we're talking about the economic trajectory of the United States right now. And we remember 22 years ago when this really keyed off a real fundamental economic shift, not just for the city, but more broadly as well. Still with us is Claudia Somm. And I want to go there with you in terms of this muddle that we're in, this sense of whether we're going to see some sort of similar turmoil in the data that will really come out in a way that's predictable, and how we sort of look at those pivot points. Yeah, well, I think Claudia Somm has been really, really good on this. And to review this, folks, she has always been not a skeptic. This is important. But Dr. Somm has not been a skeptic, but she said dig deeper into the data than the simplistic data, particularly that the financial media has. So I think there's a huge respect, even among elites at the Fed and frankly at other central banks, for the granularity of what Claudia Somm does. She was saying that it's a hold your breath moment for the labor market, that there could potentially be a continuation of the decline that we're seeing in some of the momentum, and how that could be a real problem. We're speaking ahead of a key week of economic data. CPI on Wednesday, we get out of the United States. I completely forgot about that. We have CPI on Wednesday. CPI on Wednesday. I missed that. PPI on Thursday, as well as retail sales at a time where people are wondering how long the U.S. can keep having consumers spend to such a degree when savings really do come up. Yeah. And this all comes the same week that the ECB has to make a decision, really with a slew of conflict and slowing growth. Over the weekend, this happened to be a weekend where I did a lot of reading, and the different narratives that are out there are extraordinary. And you say to yourself, within equities, bonds, currencies, commodities, where are they going to fit in? And John was talking about the persistency of iron ore actually showing a China that's not going to end. I mean, for those of you on radio, we've lined up the events of the week, and what's not on there is China. Maybe this is a week where we walk away from China, but I would suggest, I don't hear people talking about 0, 1, 2% Chinese growth. I think there's a more buoyant tone there, even with their financial challenges domestically.
Well, today, or overnight, I should say, heading into the U.S. day, there was some strong credit data published out of China, which raised questions, are we at peak pessimism for China, which might have been part of the reason why the UN was actually responding to some of the jawboning that we heard from the People's Bank of China. I mean, this to me is interesting. Are we seeing signs that things aren't quite as bad?
And to dovetail it in with Mandeep Singh here, the key thing for Mandeep Singh is Apple's supply chain, which is where Mr. Cook created his career at Apple. And that goes again to we're bringing it full circle here to the president visiting Vietnam, just as one example, or maybe the hopes and dreams of India, where there's a complexity here of these stories dovetailing together, and I can't tell you where they're going to be. We're in September. Where are they going to be Halloween, 50 days out when my pumpkins have rotted?
Right. Which story is going to be more important? Do you buy a pumpkin early? Is that what you do?
We buy them decorative, and then, we have a carving feast like everybody else. It's embarrassing.
Wait, you buy them pre-painted? You're a pre-painting
I'm not doing the pre-painting thing, but, the vet bill and kennel fee, they got to go out trick-or-treating, so...
What are they going to dress up as?
Cats? Well, they go as cats. One year they went as cats. That didn't work out.
But this is a good point in terms of not really understanding how to game out further what's going to be the predominant story at a time where geopolitics is coming in at a changing sort of economic regime.
We welcome all of you on a September 11th on a Monday. September 11th for us on the weekend is just different. It is about a working day, as it was, with futures up 22, with life going on 22 years out. The imagery is very appropriate for September 11th, but this time is different. At the Pentagon will be the First Lady. In Manhattan will be the Vice President of the United States. The second husband will be in Pennsylvania, I believe. And the President flying back from India, in Vietnam, that in itself, some huge ceremony in Vietnam, and to see the president have remembrances here. We'll see this later this afternoon, I believe, in Anchorage, Alaska. So it is a different September 11th, Lisa.
It is a different September 11th. And, we were talking earlier about how long it's going to remain such a front and center kind of visceral feeling. And it just has not faded. And we keep talking about how much that just has been a present feeling. It reconfigured the downtown of New York City. It reconfigured certain aspects of the of markets, really. And yet, one thing that as we celebrate the sort of opening of markets every day with the ringing of bells, life does go on. And there is that sort of push-pull amid the tragedy.
The hallmarks of our lives, and for those older, very few in remembrance of Pearl Harbor, but the idea of John Fitzgerald Kennedy's assassination and 22 years on from Pearl Harbor was Pearl Harbor 22 years on was 1963. I find that stunning. When I did that math in my head, I believe it was yesterday, it really set me back here. And we see it, of course, in Manhattan, the beginning of the ceremonies here 3 minutes away. From a first remembrance of a first plane striking the World Trade Center with mayors assembled. It was good to see Mayor Giuliani and Mayor Bloomberg there, as well as they lived it.
We're 3 minutes away from the moment of silence. Claudia Sahm back with us for a moment. And I would love just, Claudia, to get your sense of how an economy reshapes following a tragedy, following a massive disruption, and what lessons kind of are applicable today.
Right. Well, we're watching it today with COVID. I mean, we've certainly had national tragedies like 9/11 in the past. It's slow and it's painful. I think many economists underestimate that 3 years ago, we shut it all down, right? And there were a lot of disruptions. And I think, I certainly underestimated how long it would take to get things back on track, the transitory. It wasn't 1 year, it was 2 years. And I think there's a lot of disruptions. We've seen that they're not unwound, and they may not, right? Like they may have a lasting imprint on the economy. But I think mainly it's just we got to give ourselves some time to get there.
Claudia Sahm, thank you so much for rejoining us again today. Dr. Sahm, of course, with all of her work at Sahm Consulting and, of course, with the Federal Reserve System. That reminds me, at least, of the courage of Roger Ferguson. Alan Greenspan was abroad on September 11th, and the vice chairman stepped up big in the absolute chaos that there was through that day and even into the next day, September 12th. Roger Ferguson is the one that solidified the financial system of America on September 11th.
A lot of commemoration today on the anniversary, the 22nd anniversary, when we think back to a time that was so recent, it feels like, in so many ways, that did reshape many aspects of downtown. The pomp and circumstance has grown with the years that have gone on, but really the emotion still very much present, Tom.
We welcome all of you worldwide and across this nation for this set of ceremonies. We saw the Pentagon earlier this morning, and I believe we'll see that later. And, of course, Shanksville, Pennsylvania as well. And, again, the President of the United States in Anchorage, Alaska. Look for that later this afternoon. It's still emotional. There is a bell in Lower Manhattan. It's every year. I keep waiting, Lisa, for this to get easier, and it just doesn't, does it?
No, it does not. And it doesn't for all the families that were torn apart, and it doesn't for all the people who lost the people with them who loved them.
So Mayor Adams lined up with the governor of New York and others. Let us listen in now to this moment of remembrance.
Right, quick, march.
In Manhattan, in New York, a ceremony that we've seen for 22 years. Again, Bloomberg will give you full coverage through the day on Bloomberg Radio and Bloomberg Television of these memories across the nation. We'll listen a little bit more to this beautiful music. Firefighters, police officers as well. A data check here to continue back to our world. The future's up 23, Dow futures up 71, and the VIX 14.16. As we look at the equity markets and where we are in 2023, I can say it was easier in October of last year when Gina Martin Adams said, you have to participate, you have to be in the market. She never said, go to cash. She joins us today at a time where a lot of people want to go to cash right now. Cash is 5% plus, et cetera. There's an allure there wasn't there over 16, 17 years.
Right. And it is a very different environment. The equity risk premium is substantially lower than it was 15, 16, 17 years ago. It is a much more difficult environment for investing because of the distortions in the equity market as well. If you look at where the valuation excesses are in the S&P 500, they're almost entirely in the tech space in the top 5 to 7 stocks specifically. And those stocks are very, very vulnerable at this moment in time, as we've experienced over the last couple of weeks. Any news on Apple, which is the biggest company in the United States, but also now bigger than the entirety of the small cap index in terms of market cap, is going to have a very significant impact on the index at large. So there are a lot of distortions to contend with. It certainly is a lot more difficult this time of this year than it was this time of last year, when investors were all very fearful. Now investors have generally gotten back on board, have been more interested and engaged in the equity market, and that naturally creates much more difficult investing conditions.
Is this a frustrating time to be trying to come up with strategy?
You know, I think that you could say that about any point in time. It's always frustrating. It's always challenging. There are new challenges. It's part of the reason I love what I do. It's never the same. Every day is different as an investor. Today's investing climate is absolutely substantially different than it was, especially 10 years ago, right after the great financial crisis. You had an environment of certainty with respect to interest rates that was unique in historical perspective. We had not been through that kind of climate before, at least as an investing generation. And when you have an environment of extreme certainty in interest rates, extreme certainty in terms of inflation and inflation levels, as well as volatility, that creates very different investing conditions than that which exists today. I think the most frustrating thing for most investors today is how generationally different the interest rate landscape is. The inflation landscape that is the backdrop for that interest rate landscape, incredibly contentious and difficult for an investor that's been in this market for 20, 30 years, in which we just haven't seen this kind of climate.
Right now, people are talking about the difficulty in trading ahead of some key data that we get this week. CPI on Wednesday, PPI on Thursday. From your vantage point, how important are those data points? How do you trade around them at a time where it's not going to be one data point that moves the needle for the Fed?
Yeah, so it's different now than it was, say, earlier this year. Inflation became this major turning point for stocks late last year, early this year, when CPI crossed over PPI for the first time in more than a year. Consumer prices were finally rising faster than producer prices. Both are decelerating. So now it's a matter of continuation. That critical turning point was really consequential for equity portfolio strategies, without a doubt, and was a point in time when you wanted to rotate into more cyclically oriented sectors, away from defensive sectors, toward sectors with the potential for more margin expansion, whereas before we were sort of just generally worried about everything. Now it's just, can we continue to see this momentum, which is a very different environment. And frankly, it's a lot more difficult because you don't have these major turning points, these major catalysts for change. It's, will the Fed finally stop? It's, will CPI and PPI continue to improve, which creates actually greater degree of stress and risk than the major turning points, which are the bigger opportunities.
My textbook says I'm supposed to look out 3 years. So if I do the math on Walmart at a revenue growth of 5% per year, I think that's a simple revenue growth of 15%. Microsoft's going to give me, let's say, 11% per year, which is a simple growth, double 33%.
Right.
Why in God's name wouldn't I buy Microsoft over Walmart?
Well, I think that most investors are doing that same calculation and coming to the same conclusion based upon where multiples are. You would assume that that is arguably priced in the
So
stocks.
are they rich? Is Microsoft or these luxury goods in France and the rest of them, are they value stocks?
They are still growth stocks. They're too rich to be value stocks, unless you get a surprise to those expectations, which I think is increasingly what investors are counting on, is not only am I going to get that 33% growth, but I'm going to see a surprise to the upside from that growth outlook. And that's what's commanding this excess in terms of valuations.
What do your people say? I don't care what I think. Or, what
a lot of it, frankly,
say?
Depends upon the rate of assimilation of AI and the rate of growth of AI. It's a transition in capital spending.
She has no clue. She's just reading Mandy.
It's very true.
I think we all are. Honestly, we all are trying to understand exactly what the implications are here.
Well, and I think that's what got priced partially into this tech space over the course of the last 6 months is, oh, wow, this is something new. We don't know how to price it, but we're going to presume that it's a lot faster potential growth than we were pricing 6 months ago. What is that faster potential growth? It's largely going to depend upon how fast those programs get embedded into capital spending plans, how fast they become an integrated part of overall operating efficiency improvements. And these are still TBD, right? We don't know, for instance, how fast a consumer staples or a retail company is going to pull AI into their operations. We have a pretty good handle on technology providers themselves. What we don't know is the rest of the economy and how fast that can improve.
It's a blue chip stock. Hostess was taken out. I lived on Twinkies there was a 3-year window in the 60s where I single-handedly propped up Hostess. Is Smucker's, do they care? Does Smucker's Hostess, do they care about AI?
Sure, why not? In terms of their brand value, think about what their intangible assets are on their balance sheet and how important their brand is to them. To the degree that they can utilize AI to assess the degree of brand improvement.
AI is going to help them
100%.
With peanut butter, grape jelly combined?
Believe it or not, because they can utilize these technological advancements to understand their client base better. They can use any form of technology to figure out how to access their market faster. These are all efficiency improvements for these companies. In particular, the brand-centric improvements have huge upside for utilizing AI to figure these things out.
What does it mean to you that some of these deals are coming through right now? I mean, the fact that we are seeing this acquisition of Smucker's buying Hostess, of the idea that Instacart is potentially going public even at a reduced valuation.
Yep.
Are they trying to time the market? How is this playing out?
I don't think they're necessarily trying to time the market. I think it's a combination of things. The first is, one thing to consider is companies are sitting on an enormous amount of cash. And I think that we sort of forget the fact that cash on corporate balance sheets is still near all-time highs. Even with debt increasingly accumulating and the cost of debt rising, cash is still enormous, and it is fueling some degree of transaction value. The second thing to consider is just in an environment of uncertain growth, where growth prospects are going to come from, sometimes the best way to utilize that cash or to utilize your balance sheet is simply to buy growth. When you can't invest in it yourself, you have fewer return on investment ideas. Buying growth turns out to be a pretty reasonable opportunity for some of these companies. And then in terms of deals coming to the market, I mean, we've been through 20 years now of just no deals coming to the equity market. So any deals coming to the equity market are generally pretty well subscribed. In particular, deals that are in hot spaces, in growth areas of the market, deals are going to be subscribed because there is still some demand for equities, public equities, despite popular belief, and there's very limited amounts of supply.
Thank you so much. Gina Martin Adams here with Bloomberg Intelligence here on the equity markets. This afternoon, one of my favorite people, Howard Lutnick of Cantor Fitzgerald, will be with us in the 2 p.m. hour. He has, with his son, such memories and pain of September 11th, an important annual visit with Mr. Lutnick, always valued by Bloomberg. We're going to leave you this morning with the reading of the names. And Lisa, the hardest part here, these kids got bigger.
Yeah, well, yeah, they lost people who they didn't even remember.
They were little.
They were little.
And they're not little anymore. But it continues. Thanks to our team for the imagery today of September 11th. And we'll continue this. John Farrell will have it on television through the 9 o'clock hour, and we'll have it on radio as well. It is September 11th.
Firefighter Gerard A. Barbera.
Paul Vincent